A very good evening to one and all. We have this very interesting seminar starting today, which is the Direct Tax Refresher course. It's a very highly awaited seminar of the region. But before we start off with the session, the inaugural session, may I request all to place their hands on their heart for the ICI motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता
So friends, we are really privileged and honored today to have with us Justice Shri P.P. Bhatt, President, Income Tax Service, Mumbai, President of the Institute of Chartered Accountants of India, C.A. Nehar Jambusaria sir, Vice President of the Income Tax Appellate Tribunal, Mumbai, Shri Pramod Kumar sir. He is also a Chartered Accountant, Chairman of WRC, C.A. Manish Gadia, past President of ICAI, C.A. Sunil Talati ji, faculty, C.A. Yogesh, Thar, past Chairman, C.A. Dilip Shah. We also have with us the office bearers of WRC, Central Council members, past Chairman of WRC, and my regional council colleagues with us. So friends, I welcome you to this marquee event of WRC, which is called the Direct Tax Refresher course, which touches upon all the burning issues of direct tax. It has 8 sessions, 8 technical sessions, which are spread over 4 Saturdays, starting today. And the sessions will be taken by some of the best brains in income tax. We are really privileged to have them support us in our effort. Now may I request our Chairman WRC, C.A. Manish Gadia, to address the gathering.
Thank you, Madam. Respected Justice P.P. Bhatt, President ITAT, C.A. Nehar Jambusaria sir, President ICI, Shri Pramod Kumar sir, Chartered Accountant and Vice President ITAT, Sunil Talati sir, past President ICI, my office bearers, C.A. Yogesh Thar, faculty, past Chairperson, WIRC Dilip Bhai, Preeti Ben and Lalit Bajaj ji, and Central Council member Srinivas Joshi sir, and all my regional council member, and all the dear participants. First of all, I thank all the participants for showing overwhelming response and registering more than 1,550 participants to this program. It is a much awaited program of WIRC every year. I request everyone to keep their mic on mute. Noise is actually coming. So the way we were practicing earlier has changed totally. Our members were mainly dependent on compliance practice till now. But now time has changed and we have to take a bold decision and to look beyond compliance, organize ourselves to learn new things so we can deliver value-added service, take up a litigations, etc. Keeping the same in mind, this year DTRC has been planned. The direct tax procedure and compliance has undergone large shift in this year. Faceless assessment has started last year. Now we are looking forward to a faceless appeals. This is a good decision in the right direction, I should say. Drafting skill needs to be taken to a next level to excel in a faceless appeals. As per income tax amendments, now all trusts have to re-register themselves under Section 12 AB and revalidate their ATG certificate. At WIRC, we have received various requests from various trusts that they are not able to locate their old trust deed. So we have requested Tax Commissioner of Maharashtra, and immediately on our request within 18 hours, he has issued instruction to his offices to give old trust deed to the trust on a priority basis. Keeping this in mind, the re-registration has now become very important. So, under the leadership of Direct Tax Committee, we have started a help desk on re-registration. The compliance in TDS and TCS is now not just restricted to services or work contract, but it also covers all trade with the introduction of TCS on sales and newly started TDS on purchase. The changes in budget relating to the treatment of goodwill and depreciation thereon has changed the dynamics of merger and acquisition. We are also covering important judgment in this DTRC. We have specialists who will explain the nuances and complexities of various important topics in this DTRC. So I welcome you all and wish you all happy learning. Over to you, Rusti Madam.
Thank you, Manish Bhai, for sharing with the attendees all the flavor of the entire seminar. Now, may I request Arpit Kabra, Secretary WRC, to please introduce the guest of honor for the day, our President ICI, CA Nihar Jambusaria sir, and President ITAT Mumbai, respected Justice Shri PP Bhatt sir.
Am I audible?
Yes.
I think that's the first question that I'm always
Arpit, is it necessary? Otherwise, let us start straight away. Really not necessary.
It's my pleasure and honor for me to please invite President of ICI, academician, a teacher, a professional, a practicing professional, and also a member from industry. A chartered accountant who encompasses all the roles of that a chartered accountant can do in a very, very polished manner. CA Nihar Jambusaria, the President of ICI. With these words, I request you, sir, to please address the gathering.
Thank you, Arpit, for being very brief. Honorable Justice PP Bhatt, President of the Income Tax Appellate Tribunal, Vice President CA Pramod Kumarji, we treat him as part of us only, being a chartered accountant. Chairman, Vice Chairperson, Secretary and Treasurer CA Manish, Drusti, Arpit and Jayesh. Today's learned speakers, CA Yogesh Thar, our own past President CA Sunil Talati, past Chairperson CA Preeti, my council colleague CA Srinivas Joshi, CA Vishal, and all those who are attending. In fact, it's a pleasure to come here and address at the flagship program of the WIRC. Direct Tax Refresher Course is one program for which all the members in the region await, and all those who are in tax practice would like to join and attend this program. The faculty lineup and topic lineup that you have done for this entire series for the month of June is really excellent. Today you are taking up faceless assessment and appeals which requires thorough deliberations and really skill building of our members. I may suggest that today Yogesh Bhai will guide the participants thoroughly well, but probably he will agree with me that this may require some practical demonstration. The manner in which in the past we have done mock tribunals, mock search and seizure, probably you may take up mock faceless assessment and faceless appeals. And particularly on today's subject, I think there are some areas which are very gray because it is just the beginning of faceless era, like data upload, which many have felt that due to bandwidth problem, data upload on faceless assessment used to be an issue, particularly on cross-examination of witnesses, remanded cases. There could be difficulty in faceless assessment as well as appeal, and how to deal with such situations the speaker will deal with. But these are some points which I thought may come up because we are entering an absolutely new way of representing, and initially at least it may cause some difficulty. And members need to have these skills developed to represent on virtual mode. Even taxation of charitable trust in today's scenario is a very important topic. In COVID, every NGO has come forward and helped the needy people, and they need to retain their exemption and see that the registration and re-registration processes are done on time, 30th June being the last date. At the Institute, we have taken some initiatives about which I would like to apprise the members. Particularly, you will agree that since last year after COVID broke out, we were all interacting on virtual mode. And even members had to carry out that audits also on virtual mode. And we realized that the power of technology is so much that every chartered accountant will have to learn this new age technology, robotic processes, artificial intelligence, blockchain, cyber security, and everything connected with technology. We have made efforts in last 1.5 years to launch intensive courses on all these subjects, and many members have taken advantage of it. There are yet many to undergo these courses and develop their skills in technology, which will be very important. This year, we have started another initiative for the general public, and that is financial and tax literacy drive. You will all appreciate that the progress of any economy and country would depend upon whether the small and medium-sized enterprises have basic knowledge of finance and tax, and then only they will be more tax compliant and they will be able to manage their businesses well. So starting from students to retired persons and from small enterprises to big enterprises, the financial literacy drive has been started. We launched this drive on 1st July. That is our foundation day. And we are expecting that this drive will benefit a large number of population. Another very important initiative is sustainability. Today is World Environment Day, and the way climate is changing, temperature is rising. It has raised concerns all over the globe, and every country in the world is struggling to see that climate is maintained, and we all see that carbon emission is kept to the minimum, and we protect Mother Earth. Last year, we established Sustainability Reporting Standards Board. And since then, this board has taken up many of the sustainability development goals very seriously. And with SEBI and Niti Aayog, we have launched a number of programs and number of projects, particularly social stock exchanges, one initiative of SEBI, where ICI is almost a partner with SEBI developing that project. Apart from this, since last year, on revival of economy, ease of doing, several groups of chartered accountants prepared an exhaustive research material practically usable by the government. And last year we submitted a number of papers to Niti Aayog which were appreciated very well by them. And I am sure that now our members will realize that although tax still remains the core area of practice of chartered accountants, going forward, probably chartered accountants will have to embrace a large number of subjects, including advisory, management, economy, and many others. And the institute will not be found wanting in providing them the required training and skill upliftment programs. So we will do everything to do that. Let me come back to today's refresher course. My best wishes to this course, and I'm sure that at the hands of President ITAT, when this course is launched, we will get many other inputs on how our members will appear before ITAT in the new scenario and what IATS thought about the new system of appeals and whatever new is coming up in the area of taxation. Thank you so much for inviting me. It was a pleasure to talk with you and share some of the initiatives of the Institute. Thank you.
Thank you, sir. Thank you, sir, for sharing your thoughts and giving a flavor of the topic for the day. May I now request Secretary WRC Arpit to please introduce the Honorable President ITAT Mumbai, Justice PP Bhatt, to the audience. Arpit, over to you, please.
Thank you, madam. It's indeed a great moment for me and an opportunity, really privileged to introduce a personality and the journey of whom is an inspiration for all of us. Born on 6th September 1956, primary education in different districts of Gujarat, graduated in arts, political science from HK Arts College, Ahmedabad, and obtained degree of law from LA Shah Law College, Ahmedabad. In 1984, enrolled as an advocate to the Bar Council of Gujarat and started practicing in the High Court of Gujarat. As a lawyer, appeared in several. May I request someone, because there's an echo coming in, may I request please if we can mute ourselves, because I think it's one of the most important part, because when we hear about personalities like sir, I think we get a lot of things to learn on. Thank you. As a lawyer, appeared in several matters related to constitutional law, service law, civil as well as criminal law, represented semi-government corporations, bodies, local self-government, I mean everybody at whatever level, and sir has been representing there. Also has advanced issues involving public interest in the code of law. Invited to join the judiciary and appointed as judge, City Civil and Sessions Court on 10 July 95. Dealt with numerous civil as well as criminal cases. Appointed as member secretary, Gujarat State Legal Service Authority on 25th May 2001. Took keen interest in furtherance of the objectives and activities of the Legal Service Authority and worked hard, especially for the redressal of claims of the victims of disastrous earthquake of Gujarat in 2001. On 26th May 2003, appointed as Registrar, High Court of Gujarat, and on creation of the post of Registrar General, became the first Registrar General of High Court of Gujarat. Played proactive role to bring about administrative reforms in the field of infrastructure, creation of new posts, use of information technology in the High Court, as well as the district judiciary. Actively involved in the organization of various programs and projects held during the Golden Jubilee year, including development of the History and Heritage Museum of Gujarat Judiciary in the Gujarat High Court. Had an opportunity to work with Director, National Judicial Academy and professors of IIM for evolving court management plan. Attended and participated in various state as well as national level conferences. On 22nd February 2007, repatriated and posted as Judge, City Civil and Sessions Court, Ahmedabad, and again appointed as Registrar General, High Court of Gujarat on 1st February 2008. 1st September 2010, repatriated and posted as Judge, City Civil and Sessions Court, Ahmedabad, worked as a Special Judge, CBI Court. Elevated as an Additional Judge, High Court of Gujarat on 17 Feb 2011. Transferred as an Additional Judge, Jharkhand High Court, Ranchi, 27 June 2011, and retransferred to High Court of Gujarat on 11 February 2016. Retired from High Court of Gujarat on 6 September 18, assumed charge of Office of President, Income Tax Appellate Tribunal, 24th October 2018. So what a journey you've had, and really it's really inspiring. May I request all of you to please join hands and welcome with a huge round of applause, Bhatt sir. And I request Dushi madam to please take over now.
Thank you, Arpit. It's really a pleasure to have sir over here. It's really an honor for us to have such a tall personality with us today here. Sir, before I request you to start off with your address, may I, request you to launch two publications of WRC. So we have the Direct Tax Reference Manual, which is a very large compilation of a lot of laws, and the manual has a lot of useful information. And there would be more than 200 contributors who have worked on this. All chartered accountants have worked on this. The entire effort was spearheaded by our regional council member, CA Vishal Doshi, who is also present here with us. So that is one publication, and the other publication that we have is under GST, the concept of mutuality. And for that publication, our regional council colleague, CA Umesh Sharma, had really put in a lot of effort, and we have the authors of the book, CA Naresh Sheth and CA Archit Agarwal with us. Sir, if you just click on the screen, we will be able to launch the book.
Okay. Yes. Yeah.
Okay. There. Thank you, sir. Thank you, sir. It's really a privilege for us to have the books launched at your hand. May I request if you could take over the session and guide the audience. Over to you, sir.
Sri Jambusariyaji, President, and Dr. Debasis Mitra, Vice President, Institute of Chartered Accountants of India, Mr. Manish Gadia, Chairman, Ms. Drishti Desai, Vice Chairman, and other office bearers of WIRC of ICAI, distinguished faculty members, and dear participants in the Direct Tax Refresher course. Ladies and gentlemen, it is indeed a great delight for me to be with all of you this afternoon to inaugurate this virtual refresher course on direct taxes and to have this opportunity to interacting with you. I must first of all compliment the Institute of Chartered Accountants of India for doing a great job in helping the chartered accountant fraternity, keeping their knowledge updated, and in fact, in sharpening their professional skills in the field of, amongst other things, direct taxes. The events like this is certainly go a long way in achieving your mission of knowledge updation and professional development. My heartiest congratulations on this initiative and my best wishes for the success of this event. In the last 2.5 years, as head of the final fact-finding authority under the Income Tax Act, that is, as a president of the Income Tax Appellate Tribunal, I had an opportunity of interacting with the Institute of Chartered Accountants of India and having the benefit of its cooperation in several fields. Earlier this year, I had the good fortune of inaugurating our first camp court in the ICAI premises at Srinagar. The ICAI has all along been closely involved in all our major functions, including annual conferences, and we have also entered into a memorandum of understanding with respect to the use of ICAI premises for our certain camp bench facilities. On our part, the ITAT has also offered practical training to the young students and even young CAs so that they can have the benefit of practical training in the area of direct tax litigation. I am looking forward to your suggestions about the fine points of the scheme so that we can give it a final shape. That is only the beginning. We are keen to explore other possibilities of our mutual cooperation as well. I am sure in times to come our cooperation will grow and will bear more fruits. I place on record my deep appreciation for the cooperation that the Income Tax Appellate Tribunal has received from your institutes in several areas, and I must say that all of us in ITAT deeply value and appreciate this cooperation. Friends, ever since I have assumed the charge as President of the Income Tax Appellate Tribunal, I have made every effort to bring systematic reforms in the ITAT and to provide the highest quality of services to all the stakeholders. It is in my tenure that our beloved Prime Minister has dedicated two of our ultra-modern integrated complexes to the nation, one at Bangalore and other at Cuttack. We have acquired 11,000 square meter of land in a prime area in Ahmedabad for building our model office cum housing complex. We have acquired land and the construction work is to begin shortly in Calcutta. In New Delhi, we are shortly to shift our new ultra-modern office complex. The work in Lucknow has already begun. Our designs and plans for the use of land acquired in Pune are at finalization stage, and the work for infrastructure development is in progress at several stages. The work for the renovation of our Mumbai office is also in progress. However, the last 1.5 years, since last 1.5 years, we have passing through very tough time. However, the progress with respect to infrastructure development at various stations is under progress. We could have achieved much more in this area, in the area of the use of technology in judicial functioning. We have been at forefront. We were pioneers in the use of web conferencing for our virtual courts, and despite the lockdown, our work has not stopped. Today, all our benches in the Mumbai as also in major stations are fully functional through virtual mode. I am happy to mention here that during this 1 year and more perhaps, we have disposed of more than 20,000 appeals. Later this month, we are starting online filing of appeals. Not only are you able to argue your appeals in the virtual mode from the comfort of your office, but you can also even file your appeals from the comfort level of your office. All these changes are to provide better services to our stakeholders. I can assure you, friends, that the Government of India and all its organs are deeply committed to rendering the highest quality of public service. Friends, I would not take more time. I know you are waiting to hear from an eminent faculty members. It is indeed very kind of these eminent people to share their knowledge with you. Their wisdom, their experience, and their knowledge will help you emerge even stronger in your skills as well. I wish all of you all the best, and I am positive that the time and the efforts you are putting into this event will be rewarded. And yes, I am very keen to hear from you and to have the benefit of your suggestions about improving the functioning of the ITAT. All of you are of our important stakeholders, and I deeply value your inputs. Please feel free to give me your feedback and your suggestions. Thank you once again for inviting me today and for giving me this opportunity of interacting with you. My best wishes to all of you. Thank you very much. Jai Hind.
Thank you, sir, for sharing your insights. May I request our Treasurer WRC CA Jayesh Kala to please propose a very well-deserved formal vote of thanks.
Thank you, Drashtiben. It's indeed a privilege to propose a formal vote of thanks in presence of all the stalwarts. Nihar Bhai has given the vision for the ICAI, and it is for all of us to follow that vision, and we have to ensure that the thoughts told by Nihar Bhai is fulfilled. Justice P.P. Bhatt, President ITAT, has given some clue about the faceless appeals, and going forward, even the appeals, even the filing of appeal will be in a online mode. It is really a very welcome step, and all the stakeholders are definitely will wait for that time to come, and the way in which the smoothness has happened in the faceless regime. Earlier, like when it was started, everybody has some doubt that how the appeals are going to be faced, how the assessment will be there. Maybe there will be some unjustified additions would be there. But let me acknowledge that the department has worked really very well, and the due justice, due thoughts has been given before passing any assessment order. And I believe same thing is going to happen for the ITT appeals also. In fact, Pramod Kumarji, Vice President, is already, as we had interacted a lot, and he has already initiated some appeals in the online mode, not the faceless mode, but online mode, and it is very, we can say that it is working very smooth and a very diligent way. So it is all privilege for WIRC for attending this session, and thanks to President Justice P.P. Bhatt sir, Vice President Shri Pramod Kumarji, President Shri Nihar Bhai, past President Sunil Talati ji, past Chairperson, for gracing this, and Srinivas Joshi sir for gracing this wonderful occasion. And thank you very much on behalf of WIRC. Thank you very much, sir.
Thank you, sir, for sparing your valuable time and insight.
Thank you. It's always pleasure.
So now we move on to our technical session of the day. And the first session that we have is on faceless assessment and appeal.
And you can carry out your program. Thank you. Thank you. My best wishes.
So thank you so much for being there. Okay, so we move on to the next session, is a technical session for the day, which is faceless assessment and appeal. The session will be taken by CA Yogesh Thar, our learned faculty for the day. And we have the session chairman, Srinivas Joshi sir, CCM from Mumbai. So may I request, first of all, Srinivas ji to please address the gathering, and then we can take it forward. Sir, over to you, please.
Yes, thank you, Drushti. Manish Gadia ji and Chairman WRC, whole team, past the current President Nihar Jambusare ji, and all my colleagues, Yogesh Thar ji, the speaker of the day. Friends, a lot of things. Initially, I'll say something about Institute in a couple of minutes. This is the President has said many things, but I would like to say that in this present very difficult times, we need to change, because it is said that nothing changes if nothing changes, and we need to change a lot. I think the solution for our current woes lies in 3 words can be stated, that if we can adopt this: networking, automation, and specialization are the keywords today to come out of what we are in the mess. Friends, networking will promote cost sharing, knowledge sharing, common IT infrastructure, common quality control procedure are also specialization. I will request you to refer to the current networking guidelines for this, which will help us a lot. The second point I'd like to make is about virtual CA firms. The virtual CA firm is the order of the day. It is a need of the hour. Video conferencing facilities, VPN, practice management softwares, or employee performance tracking softwares, and enabling work from home will be the key to survival and key to progress, is my opinion. In this regard, we can look at DCMM 2.0 for self-evaluation. This is digital competency maturity model of the institute, which is adopted by Europe taken from ICI India. Audit quality, friends, is the paramount to audit delivery to the satisfaction of stakeholders. I sincerely urge you to look at a draft of audit quality maturity model available for comments and suggestion for improvement. Please respond to this self-development measure of increasing audit quality and indicators and key performance indicators, which would help the whole profession. I also urge you to go for several online courses, especially the courses of Digital Accounting and Assurance Board, DAP, on artificial intelligence, cybersecurity, data analytics, and forensic accounting and fraud detection. Just to name a few, they are very available at very reasonable price, and it will help us substantially, especially youngsters, in this. Just to now coming to the subject proper, I think saying anything on the subject where Yogesh Thar is there would be very difficult and very dangerous both. I don't think I should even try for that, but I will still like to say before he starts speaking that I think as in the institute we thought that this is a very good initiative in a way that it's good for towns and official areas where practitioners are unable to come or spend a lot of time coming, and if the assessment is actually not taken up for any reason, appeal is not taken up, they have to go back and come several times, and they cannot take part otherwise in this type of proceedings, and now they can do it from their offices directly. And suppose some of the another advantage is we can outsource the work from large metros and cities to the smaller towns where there are very, very capable chartered accountants who have done excellent in taxation and can do my appeals or do my assessments from their office, which for capacity building, we thought that it's one of the finest way. We also thought it as good initiative because I have say Yogesh Thar sir is not available in Mumbai. I can, wherever he is, he can still go for, attend my appeal or assessment. This is where the best of the practitioners were available as an institute. We thought the best of the practitioners are available from anywhere in the world, anywhere in the country. Even if he is not in this country, he can still attend. These kind of things would be on a positive side. Coming to the other problem, President mentioned that data uploads and other issues he has mentioned that are issues here. Some of the assessment, all of you are aware, have come very, very, I would say very bad, in a sense that very high pitch assessment. Lot of taxes have been levied. To go in appeal, we will have to pay percentage of the taxes at every appeal stage, higher and higher. And in this pandemic, the industry does not have money, that doesn't have liquidity to pay for such taxes and then go in appeal. This kind of faceless has created huge issues, and many of our chartered accountants who have faced very bad assessments, I think they feel that this is impracticable. I will request the Yogesh Tharji to comment on that. Sir, I'm very sorry to say, but those who are very highly critical of this particular, including of course the lawyer community, which has gone into courts against saying that appeal should never be on faceless. But I think those who are really suffered, talk about impracticality, and you please guide us on that, whether faceless is really, and in their language they say it's heartless, it's fruitless, it's hopeless, it's useless, and therefore baseless. If you agree to that or do not agree, we will like you to share your views, sir, in addition to, of course, technical things about this kind of assessment. Thank you, friends. Thank you for being with us. And let us be with Yogesh Tharji now. Thank you.
So Joshi sir, you have actually given a line of thought to Yogesh Thar sir for sharing his views on this, of course, on a lighter note. May I now request CA Jayesh Kala, Treasurer, to please introduce the faculty, CA Yogesh Thar. Jayesh sir, over to you, please.
Thank you, Dushtiben. It's a really proud privilege for me to introduce one of the best faculties, Yogesh Tharji. He is currently a partner of Bansi Mehta and Company, a leading chartered accountant firm in Mumbai. He is a fellow member of Institute of Chartered Accountants of Chartered Accountant of India. He has a rich blend of experience in domestic and international tax. In his work experience of almost 36 years, he has acquired specialization in the area of corporate taxation, taxation of non-residents and foreign companies, business mergers, acquisition, and restructuring and business valuation. He started his career with SV Ghatalia and Company Chartered Accountant as a newly qualified chartered accountant in 1984. He then practiced for nearly a decade as a sole proprietor and a partner in RS Kadakia and Company Chartered Accountant before joining Bansi S. Mehta and Company in 1997. He has, to his credit, authorship of several books and articles on direct tax and double taxation avoidance agreement published mainly by Taxman, the Chamber of Income Tax Consultant, and by the Bombay Chartered Accountant Society. Some of his well-known contributions are the Tax and Treaty Guide published by Bombay Chartered Accountant Society and his book on domestic transfer pricing published by CCH, which he has co-authored with his partner Mrs. Anjali Agarwal. He was visiting faculty at Narsimhanji Institute of Management Studies during the period from 1992 to 1997. He served as a joint editor of the Bombay Chartered Accountant Society publication, the Reference Diary from 1997 to 2008. Mr. Thar has served on various committees of Bombay Chartered Accountants Society, the ITT Bar Association, and the Chamber of Tax Consultant. He is presently a member of the Taxation Committee of the Chamber of Tax Consultant. For us, so I can say he's just a Bible of taxation. Whenever we have any difficulties, we can just call upon him, and he's always ready with all the practical solutions. So, ladies and gentlemen, please welcome Shri Yogesh Bhai.
Over to you, sir. I think he's on mute.
Stop, you're in mute, I believe.
Am I audible now?
Yeah.
Yes.
Also. Yeah.
Yes, we can hear you.
Is my screen visible?
Yes, yes.
Okay. Thank you, Jayesh, for your kind introduction. Respected President of the Institute, Nihar Bhai in absentia, Vice President, Chairman WRC Manishi, Vice Chairperson Drusti, past President, past Chairperson, ladies and gentlemen. Srinivas ji told us the good and bad side of faceless assessments, and then also pointed out that there have been very bad assessments, very high-pitched assessments, and therefore asked a question whether faceless is heartless, faceless is fruitless, and therefore faceless is baseless. My guru mentor, Sri Bansi Bhai, says that there are two types of people. One who find problems in every solutions, and the other are the ones who find solutions in every problems. And he has trained all of us at Bansi Mehta and Company to be of the second type, where we try to find solutions in every problems. And therefore, while I fully agree that faceless is a problem, yes, it is heartless, but I don't think it is fruitless, because we need to find fruits for ourselves, and we try to find solutions to every problem, because every lock has a key, and therefore every problem has a solution, and therefore we look at it, at the better side of it, the silver lining which is there in all the negatives over there. And the silver lining is that our abilities of drafting, our abilities of putting forward our case, our abilities of articulating things in written communication, whatever we have learned over the years. I remember right from my CA entrance days in 1980s, where we were taught English as a subject in CA entrance exams. Right from those days till we have passed out our CA, until we are in practice, and all our experience will have to be put together for the purpose of writing down our submissions in a manner that is crisp, that is to the point, and in a manner that can be understood by an officer whom you don't know, whom you can't see, whom you can't meet. And therefore, all our drafting abilities, the skill of putting across your point in written communication, plays a very, very vital role in this whole thing. And if you're good at it, then I think it's your day. And let me tell you, I have myself personally, along with my other partners, been involved in faceless assessment, submissions drafting so much in the last 8 to 10 months, that I have never been involved at the assessing officers level in last 15, 20 years of my practice, because we have been concentrating on appellate work and things like that. But the necessity of getting down to the root of the matter at the appellate stage has increased so much, and the involvement of all of us has increased, and therefore I see opportunity in this for each and every chartered accountant to present his skills, use his skills, and of course sharpen his skills. And that being, having said that, yes, you will find all sorts of assessments, because if you're sitting in, if your client is a corporate client, and the assessing officer is somewhere sitting in some corner of the country where he does not have an exposure, because all your allocation of work is to be done on an automated system, on a random sampling method, and therefore which assessing officer will get what work, what exposure he has in the areas of taxation, which type of assessees he has handled, you don't know. And therefore maybe you will find in the initial years all sorts of assessments happening. We find all sorts of assessments happening. We find cases where there are lots and lots of potential problems, but nothing has been come to the surface, despite having disclosed everything. And there are cases where there are no problems at all, but the officers have created huge problems, in terms of high-pitched assessment. So these, I believe, are teething problems, and over a period of time, they should go away. And over a period of time, you and I, as practicing chartered accountants, will have to sharpen our skills of presenting our client's case, and therefore going to the root of the matter, going to the facts of the case, understanding the facts, not just giving a blah blah of the case laws, because you can't start your written submissions with the case laws. Then if you do that, the officer is not going to like it. So getting down to the root of the facts and really pinpointing the right thing. So therefore, to sum up, I think whatever may be the negatives of this whole faceless assessment schemes, I see a lot of opportunity for we as chartered accountants to sharpen our skills and present our skills and serve our clients to the most in a very, very professional manner. With this, friends, let me quickly go. I'm told 1 hour 15 minutes roughly, and then there will be some question answers that we need to look at. So let me start off with a brief introduction of the historical background of this. India started this journey from email-based proceedings to e-proceedings on the income tax business application platform, ITBA platform. And now we are in the then it went on from there to e-assessment scheme, and now we are in the faceless era. The objective of this journey, right from October 2015, where the CBDT took first steps towards the paperless assessments, which was email-based communication scheme. At that time, the objectives which were told to us was to improve taxpayer services, enhance efficiency, and usher in the paperless environment for assessment proceedings. And then at that point of time, we were told that only notices will be sent, questionnaires will be sent to the SSCs, and we will get response from the SSCs only if they, with the prior consent of the SSCs, if they would like to do on an email. So that was a starting point, which started in the 5 metro cities: Delhi, Mumbai, Bangalore, Ahmedabad, Chennai. Then it was extended in May 16 to Kolkata and Hyderabad. So that was the first step. June 16, you found a very first interesting amendment in the law, and that is this section 223C, which introduced the definition of the word hearing. I thought hearing is nothing, what is there to define? It's a plain English word, but they defined the word hearing to include communication of data and documents through electronic mode. So therefore, hearing is not necessarily talking and listening, but hearing would include your written communication, whether written or whether electronic communication, communication of data and documents through electronic mode. And therefore, if we say that I'm not given a hearing, it's only my written communication, that argument will probably not stand the test of law, considering the fact that law has introduced the definition of hearing now in 2016. So that was the next big step, or rather the first big step after October 15 CBDT initiative of the Parliament. Then June 2017, CBDT constitutes a task force, for creation of the new end-to-end e-process of scrutiny. And at that time, they also introduced pre-verification of information mismatch before a full-fledged scrutiny was done. So therefore, a database was being created, and that database, there was a pre-verification of the information, and if there is an information mismatch, then you get into a full-fledged scrutiny. So that was the system which was introduced, and that was a task force, which was constituted for that purpose. Then the formats of the notices were revised, and then that there were 3 different formats at that point of time: one for limited scrutiny, one for complete scrutiny, and one for compulsory manual scrutiny. And so therefore, this was all on the email-based era. Then came a second stage in September 2017, when there was a migration from email-based communication to e-proceedings facility. So there was an e-proceedings facility, and department wrote letters to all the SSC where the scrutinies was pending, and then all those scrutiny cases were then based on the e-proceedings. And at that point of time, the SSC was given an opt-out option, that okay, if you're not comfortable, you can opt out, and we can still continue with the manual hearings. Statutory sanction came for the first time in 143.3a, 143.3b, and 143.3c. That was February 2018, where these sections were introduced. And at that time, we were told that there will be a scheme, and a new scheme will be introduced for faceless and paperless assessments. So this was the first time a statutory sanction was given for the assessments. CBDT then revised the formats of the notices, enabling the taxpayer to respond electronically. And then in August 2018, there was one more move, where from an opt-out, there was a carve-out which was created, and e-proceedings were made mandatory by the CBDT in August 2018. So in August 2018, all proceedings were mandatory for conducting all assessments were mandatorily to be conducted in e-proceedings, and there were certain exceptions carved out, cases of search, cases of set-aside matters, cases of non-PAN cases, and stations which had limited bandwidth, etc., etc. We were told that personal hearings will be granted in case of difficulties, etc. So this was the journey, which then, if you go forward, in September 19 came for the first time the e-assessment scheme, which was pursuant to 143(3)(a), 3b, which were introduced in the statute. In August 2020, that scheme was then renamed from e-assessment scheme to Faceless assessment scheme, and then there were further amendments in January, February 2021 on this. We'll have a look at that. Faceless assessment scheme was then legislated into the Act in section 144 capital B. So the 2019 scheme, which was a scheme pursuant to the provisions of the law, we now have the scheme introduced in the Act itself in 144B, which was inserted by the Taxation and Other Laws, relaxation order of 2020. Then, of course, it was a Taxation Laws Amendment, Relaxation and Amendment Act. It was a Amendment Act, but in that Amendment Act they inserted a new provision, giving statutory recognition to the whole scheme in the law itself. And then 1st April 2021, that new scheme under 144B kicks in. So all the assessments prior to that, which happened faceless, were pursuant to the 2019 scheme. And now whatever faceless assessments are happening and will happen will be pursuant to the section 144B itself. So which is actually nothing but a new avatar of your 2019 scheme. So in March 2021, CBDT issued, first of all notified the income tax authorities and its jurisdiction for the purposes of national and regional faceless assessment centers. And one more important announcement it made. It said that an order was issued regarding mutandis application of all the orders, circular instructions, guidelines which were issued under the faceless scheme. So what they said was that all the guidelines and circulars which were issued in the context of 2019 scheme will now become applicable automatically for the purposes of 144B of the Act. Let's have a quick look at the statutory provisions. 143, 3A, 3B, 3C, which was there on the statute from 1st April 18, which provided for assessment under 143.3 and 144. The scheme was notified in 2019 September, and scheme was applicable to assessments which were made up to 31st March 21. Now, as I said, you have 144B, which is faceless assessment, and all assessments made on or after 1st April 21. Well, what are these assessments? So this section permits what assessments? It permits 143.3 and 144. It permits 148 in a case where 143.2 notice has already been issued by the jurisdictional assessing officer. JAO here means jurisdictional assessing officer. And 148 if return of income is not furnished, and 142.1 is issued by the AO. So all your 148 cases where notices are issued prior to March, the jurisdictional AO would have issued you a 143.2. Now it will all be taken over by the National Faceless Assessment Center, and it will be done under the faceless scheme. And if you have 148 is issued, and if you have failed to furnish the return, and now 142.1 is issued to you, all those cases will also now go to the faceless assessment. So this is the jurisdiction, friends, we have to take care so far as 144B is concerned. Coming to the other things like 148, issue of notice reassessment, 147, and order under 148. This is under the new regime of 148. We all know that 148 has changed by the Finance Act last year, and now you have a complete new avatar of 148. The new 148, which has to be initiated and started under the faceless scheme, you only have an enabling provision today in 151A, which was introduced with effect from 1st November 20, but there is no scheme yet formulated. So It is only an enabling provision which says that for the purposes of 148 and 147, under the new regime of 148, there will be a faceless scheme which has not yet been announced. Then all your rectifications under 154, 155, etc. You have 157A, once again an enabling provision, but the scheme is not yet announced. Then all penalties imposable under the Income Tax Act. Then you have 274, 2A and 2B, which came into effect from 1st April 20, and the scheme has now been announced on 12th January 2021, and we will briefly touch upon this scheme in the course of the discussion today. So far as your 263, 264 are concerned, and all your order giving effects to the CIT appeals order, tribunal order, 264 order, 263 order, etc. Once again, there is an enabling provision for faceless, and there is not yet, the scheme has not yet been announced. Then DRP, faceless DRP scheme is again not announced, but there is an enabling provision in 144C, 14B and 14C. Faceless appeals, two parts, 250 your CIT appeals, 255.7 your tribunal. So far as CIT appeals is concerned, the scheme is effective from 25th September 2020. IT80, the scheme is not yet announced. What they announced yesterday was the online filing of your IT80 appeals. But however, faceless hearings has not yet been announced. There are a lot of challenges challenges in the writ petitions. We will have occasion to see if time permits. And then finally, reference to TPO 92CA8, you have an enabling provision. However, for the face, there is no scheme announced yet for the purpose of TPO. So therefore, what are the areas of faceless assessments today we have 143.3 and 144, and in some cases 148, where the notices are issued prior to March, and 143 and 143.3 read with 148 has to be now conducted. That can be conducted by the faceless scheme. And you have faceless penalties which kicked in on 12th of January. And of course, you have faceless CIT appeals which kicked in on 25th of September 2020. Apart from this, everything else is still continuing without going into the faceless. Now, how does this faceless work? It will be entirely based on your internet, email, and SMS mode. You have this National Faceless Assessment Center. The SSC will communicate with the National Faceless Assessment Center. The interaction of the taxpayer is only with the NFAC. However, the people behind NFAC are assessment units, verification units, technical units, and review units. And these are the people behind. Assessment units are going to do your assessments, verification units are going to do your verification wherever it is required by the assessing units. Technical units will give technical supports, and review units are meant for reviewing the draft orders, etc. And all this are divided in 30 regional centers, regional faceless assessment centers. These are divided. All communication. So your assessing officer friends will be sitting in your AU. AU is your assessing officer. The communication between the assessing officer and the taxpayer will be only through NFAC. It cannot be direct. So these units, who are the field people, the assessing units, verification units, technical units, review units, will all communicate with NFAC, and NFAC will communicate with the taxpayer, both the sides. So no human interface, what they call as dynamic jurisdiction, team-based working, and functional specialization. This is the theme of the entire thing. Now, who are the SSCs who are going to be covered by this? All the SSCs are going to be covered except those who are in central charge and those who are in international tax charge. All others will be covered by faceless, and if there is any physical assessment being done to all those SSCs, then that will be regarded as non-est, and it will be a null and void assessment. So, so this is the background. Now, what is the composition of these units? The assessment units, verification units, each of these units will have one principal CIT, 4 additional or joint CITs, 4 DCs and ACITs, and 20 ITOs. And similarly, review unit and technical unit, each of them will have, each of these units will have 1 principal commissioner, 3 additional commissioners, joint commissioner, 6 deputy commissioners, 9 ITOs. So the entire country, friends, is divided in this manner. All the functionaries of the department are allotted one or more of these, one of these slots. Apart from this, the slots which are not allotted are the residual slots, which are also there. Equally heavy residual slots are there, who are really in charge of the ownership and responsibilities of the case records and all other functions which are not yet gone into the faceless regime. So, as and when the faceless regime is extended by all these schemes which may be further introduced, as we just saw in this table, then you will have more and more departmental people flowing into the faceless area. What are the functions of each of these 4 units? The functions of each of these 4 units, so far as assessment units are concerned, they are to make the assessments, identify the issues, seek information, analyze material for making the faceless assessments. Verification units are supposed to conduct inquiries, cross-examination, etc., wherever the assessment unit requires. So it is not as if the assessing officer who is sitting there, he wants the books of accounts to be verified, it will go to the verification unit. No, that's not going to happen. The assessing officer himself will have to verify your books of account. He will have to himself verify whatever documents you give. But if he feels that there is further examination required, further verification required, a witness has to be examined, or a third party has to be examined, or a physical verification has to be done, then all those things will be done by the verification unit. Again, here, assessment unit cannot appoint a verification unit. The assessment unit will have to tell to the NFAC that I want certain things to be done by the verification unit, and the verification unit is then allotted that matter. We will see that in a little bit of detail in the next flow chart. Then you have this technical units whose functions are to act as a knowledge repository, to assist and advise on legal, accounting, forensic, transfer pricing, information technology, valuation, data analysis, etc. This is a technical unit. And you have a review unit where where there is a system of review of draft orders, a review of the decisions taken by one unit, and therefore what they say is team based. So this is a team which will be now carrying out all your assessments, putting all together. This, friends, is really the flowchart of how your assessments are happening today in the faceless regime. The starting point is 144B11, which says that the NFAC has to serve notice under 143.2 to the SSC. So this notice will come from NFAC. Now, in the 2019 scheme, it was NEAC, National E-Assessment Center. It was required to specify the issues for selection of the case for scrutiny. Now, interestingly, so therefore, all the notices that you received prior to March, you would have seen that your matter is selected for scrutiny for these reasons. Now, interestingly, in 144B, that has gone away. You don't have 144, the old scheme provided for it, 144B does not provide for it. So therefore, maybe now 143.2 notice is not going to tell you why your case is selected for scrutiny. Then what we are told is 143.2 has to be issued, and the SSC has to provide his response within a period of 15 days. Now, if you are not told why your matter is selected for scrutiny, I don't know what are we going to respond to it at that point of time. At the time of 143.2 notice, what do we issue? What do we say? At the time of 142.1 notice, we will provide our information which is required and our submissions, etc. But at the 143.2 stage, what do we say? We don't say anything. So what is the response that we file under 143.2? The interesting part is that when you read the notice, notice says that assessing officer over there who is signing it, he says that I would like to give you an opportunity to produce any evidence or information which you feel is necessary in support of your return of income on or before so and so date. So it's an omnibus sort of a query. You are supposed to file whatever you want to file for the purpose of supporting your return of income. So considering that, uh, please consider this aspect. Will it be advisable for me to file my computation of income, that physical computation of income which we used to do 5 years back before your e-filing happened? File the notes to your return of income, file your audited accounts, file your director's reports, all those things which have not gone necessarily with the return of income. All the summaries have gone in the return, but the physical papers have not gone in the return of income. Will it be advisable to file at that stage or not? Now, why I'm saying so? I'm saying so because it is at this stage, if you have filed your computation, especially with the notes to return of income, it may go a long way to safeguard you at a later point in time when, say, a penalty is initiated to you, to say that, okay, you have understated your income, or you have misreported your income, you have underreported your income, and things like that. In which case, you will say there is an escaping section available over there which says that if I have a bona fide reason and I have made a disclosure of the facts, then the penalty cannot be levied. So to prove your disclosure and to prove your bona fide reason, where in the notes to computation you will say that, look, I have taken this stand, I have received this sum, I have considered it as a capital receipt, I have followed these decisions. Now you decide what you want to decide. So therefore, there is a disclosure, the opportunity which you don't get at the time of filing the return. Normally, we have always been in favor of a practice that after having filed the return, you file your computation. But many a times the SSEs don't do that, or they miss out doing that. Then this is an opportunity to put across all your papers, so that the department cannot say that I have discovered something, I have asked you a specific question in 142(1) and uske baad hi tum mere ko details deta hai, and therefore you don't have a bona fide reason, and you had a mala fide intention. So in order to overcome that, it's possible to consider at this stage, at 143(2) stage. Now so the SSE will reply within 15 days. Whether he replies or he does not reply, the NFAC will assign the case to the assessing unit through what they call as automated allocation system, AAS, automated allocation system. And so therefore it's on a random sample basis. The officer across the country is selected and your case goes over there. The person sitting at NFAC is also not supposed to know where your case is going to go, because it is based on a random sampling selection basis. The only feature which I understand, which was said by one of the CBDT members in one of the webinars, was that the case will not go to the officer who is stationed at the address of the PAN of that SSE, so that it doesn't go back in that random sampling. The person who is your jurisdictional officer, or in your area, it will not go, it will go somewhere else. Therefore it is assigned. And simultaneously with this assignment, the NFSC will intimate to the SSC that your case is selected, and that's and it is selected for one of these three things. One of these three things, as I said, we have pointed out earlier, 139 cases where you have filed a return and 142(1) is issued, 143(2) is issued, or you have filed a return pursuant to 142(1), or you have filed a return pursuant to 148 and 143(2) is issued. So these are the cases which will go there. Or SSE has not furnished return of response in response to 142. Those cases will also go there. And whether SSE has not furnished return of income under 148 and a notice under 142(1) is issued. So these are the cases which will be allocated. Having allocated it to the assessing unit, AU, the AU will do one of these three things, or probably all these three things. What are these three things? He will, number one, he will look at the file, he will look at the papers, return, etc. And he wants to obtain further information, documents from the SSE. So when he wants to obtain further information from the SSE, or he wants to collect information from third parties, your lenders, creditors, your people with whom you are doing business, people whom you have given your loan, etc. In which case the assessing unit will have to tell NFAC, National Faceless Assessment Center, NFAC will seek information from SSE or from the third party. So this is one thing that they will do. When NFAC seeks information, then the SSE and the third party will give the information within a specified time. It is possible that he does not give the information. It is possible that he gives the information. If no information is received, then the law says that there will have to be issued a show cause notice why 144 should not be done. And therefore, against that notice, once again, SSE gets a second opportunity. Okay, Baba, let me give these details, otherwise 144 will be done. So he will give the response. It is possible that even there he does not give a response. So in that case, in all the cases, whether he gets the response, he does not get the response, the NFAC collects the response, or if it cannot collect the response, it will intimate the assessing unit that either he will say that NFAC will say that that no information is received, you can do a 144, or the information is received and this is the information which is received. So NFAC over there acts as a postman and gives everything to the assessing unit. This is from the first activity. The assessing unit, apart from asking for information, can also ask for conducting inquiry from a verification unit, and or it may also ask certain assistance from the technical unit. Everything will be through NFAC, and therefore NFAC will once again assign a job to verification unit through the automated system, and it will assign the work to the technical unit once again through the automated allocation system. Both these units will then provide the reports, and those reports once again the NFAC will give to the AU. So everything which started from the AU will come back to the table of the assessing unit. The responses of the third parties, the responses of the SSCs, and the reports from the technical unit, report from the verification unit, it comes over here. So now once again he sits down to make the assessment, and the assessing unit, when he sits down to make the assessment, after considering all the material available on record, the assessing unit will make a draft assessment order. Now friends, this draft assessment order is not the draft assessment order that you and I understand under 144C of the Act, where it's a draft order in case of an eligible SSE who is a who has a TP issue or who is a non-resident. It's not that draft order. It is a normal draft assessment order. Now, why this is required? This draft assessment order will be sent by the assessing unit to the NFAC. NFAC will then examine it, and it will examine it applying the risk management strategy of the CBDT, and it will examine it with the help of certain automated examination tool. They have artificial intelligence, they have all cross checkings, they have all huge database which is being developed, gathered, and let me tell you, the department is far ahead of what you and I chartered accountants are in terms of technology and the database. So they will apply this and examine the order. Having examined the order, NFAC will decide, does this order require a review? It may say yes, it requires a review. Then it goes to the review unit. It may say no, it does not require a review. If it says no, it does not require a review, then in that case, the next question is there a variation to your returned income? If there is no variation, no review required, no variation required, then NFAC has to finalize the assessment and send the notice for any if at all there is any penalty to be initiated, whatever, then you do that. So assessment gets finalized over here. That's the end of the story. But if there is a variation, then at this stage the NFAC issues a show cause notice. This is where we would have seen from January, February, March, the show cause notices that we had received. We actually received the draft order, but it is not actually the draft order coming to us. It is a show cause notice coming to us, which says that please show cause as to why your assessment should not be completed in accordance with the following draft order. and therefore that following draft order is pushed to the SSC for his comments. And therefore SSC at this stage gets the first opportunity to provide his detailed submissions. He knows at this stage what is going on in the mind of the assessing officer, because he has never appeared before him. He has only kept on giving details to the assessing officer what he has asked for, and now is the first time that he's going to, he knows what is the mind of the officer, and therefore this is the first opportunity for him to make all his submissions to the assessing unit. And in his submissions, he will, if required, he should ask for a personal hearing. Mind well, if you do not ask for a personal hearing, you are not going to get a personal hearing. It is only if you ask for a personal hearing you will get it. Otherwise, you will not get, your assessment will get completed based on whatever submissions you are giving. So SSC is asked to respond. Then the question is, does the SSC respond? Sometimes the SSCs don't respond. And if they don't respond, then in cases which are other than DRP cases, the draft, the eligible SSC, other than eligible SSC, the NFAC will have to finalize the assessment as per the draft assessment order or the final draft assessment order. I'll come to what is final draft assessment order in a moment. And if it's an eligible SSC, it goes to the DRP route. We will see the DRP route a little later, because that will be the draft order which will have to be given to the SSC. If the SSC provides his response, and all of us will definitely provide our response, then that response is sent by NFAC to the AU, and AU will now prepare a revised draft assessment order. After receiving the response, a revised draft assessment order is prepared, and that will be once again sent to NFAC. Friends, I may just pause here for a moment before going to the left side of this chart. That all this I am laboring here because we need to know this entire process. Why? Because we have seen in the past 3 months, 4 months, that the assessment orders which are received at times are cryptic. At times they have not taken into account our submissions. At times they have not given us personal hearings. At times people have not asked for the hearings. That is a different matter. At times we have asked for the hearings and they have not given. And therefore, if we know this procedure, we know what is our right and what is the obligation of the department to do. If the department has not followed this procedure, there is a possibility for you to challenge the orders in a writ petition, and we will see towards the end of this session that there are several writ petitions which are being filed, and what are the reasons for that. So that is why it is very, very important for us to know and understand this procedure. All right, so I need to deal with this, right? The stage where the NFAC says that, okay, I desire to review this order. Then if it desires to review this order, then NFAC will assign the draft order which had come earlier from the AU, which it had examined it. It will give it to the review unit, once again applying the automated allocation system. Then review unit may have to say two things. It may just concur and say that no review is required, I concur with the draft order, in which case it goes back to NFAC, and NFAC will once again, it follows the procedure under 144B 116A, so it will follow these procedures over here, and you come back from, you come back over here and do the same process. If the review unit feels that there is a modification required, then the review unit will suggest the modifications and it will send it to the NFAC. Those modifications which go to the NFAC will then to send to a new AU. If the review unit says that there is some suggestions, modifications required, then there is a difference of opinion between two fellows, and therefore it goes to a third umpire. And third umpire is this new assessing unit, new AU, other than the AU who had prepared the draft order originally. And then that new AU will now prepare a final draft order which will be sent to NFAC. And when that final draft order is sent to NFAC, NFAC will once again do this entire process, give a show cause notice to the SSC, SSC replies, and ultimately that reply goes to the NFAC. So at this stage, there is one opportunity given to the SSC. At this stage, the opportunity to the SSC must make sure that he knows the mind of the officer, mind well. There cannot be any addition which is made which is not found in the draft order. As simple as that. So he knows the mind of the officer, and therefore he has to answer everything, put forward whatever he wants to put forward over here, and he may ask for a personal hearing. So this is the first opportunity. The matter goes back to the NFSC. Once it goes back to the NFSC will examine this revised draft order, and after examining it, if variations are proposed vis-a-vis the draft order, are those variations prejudicial? So there was that first draft order which came. After that first draft order, are there further variations? Because those variations SSC has already answered. If there are further variations required, are they prejudicial to the SSC? If they are prejudicial to the SSC, after the review of NFAC at this stage, NFAC will issue a second show cause notice to the SSC. So this is the second opportunity which the SSC may get if after receiving the revised draft order, NFAC finds that any verification is proposed and they are prejudicial to the SSC, a second innings are allowed, second opportunity is allowed to the SSC, and after SSC complies with this, then the procedure which we saw in the earlier slide, this entire procedure will once again be followed. And then if they come to a conclusion that these are not prejudicial to the interest of the SSC, or if the SSC's replies are received, then the SSCs are into two baskets. One, who are those eligible SSCs under 144C, where those TP cases and non-resident cases, they will be going through the DRP route. And if they are they are all non-eligible SSCs, means other than TP cases and other than foreign company cases, not falling under 144C, those cases the NFSC will finalize the assessment as per the revised draft order, and if required, initiate penalty. And after completion of the assessment, transfer all the records to the jurisdictional assessing officer. So jurisdictional assessing officer ultimately is the custodian of all the papers, and that is the end of the assessment proceedings. And if it is an eligible SSC, then you go through the DRP route. Today DRP, where the SSC files objections to the DRP, today DRP is physical or virtual, but it is not paperless, it is not faceless, sorry. Then the AU will have to pass the order in accordance with the directions of the DRP. If it is a non-DRP case where the SSC does not file an objection, or he gives an acceptance, then the NFSC will finalize the assessment within the time allowed, and that's the end of the story. So this is how the faceless assessment entire procedure happens. Faceless assessment, only specified territorial area, specified persons. This was a CBDT order, but now practically speaking, everybody other than the central and international, other than those who are in the central circle and the international tax charges, they will all be covered by NFAC cases, faceless scheme. And so therefore central are cases of search, survey, etc. In survey also, if there is an impounded material, it will go to the faceless. If there is no impounded material, if there is an impounded material, then it will go to central. If there is no impounded material, then it will go through the normal faceless scheme itself. And international charges, non-resident foreign companies will still continue in the regular ranges and not in the faceless. 144B5 and 7 says all communication between SSCs will be through NFAC. Communication will be exclusively by electronic mode. Internal communication also exclusively by electronic mode. There's only one exception carved out, cases where physical verification is required, and that those physical verification will go as per the, obviously not through the faceless mode. Then NFSC has to authenticate its communication by affixing digital signature. And SSC will have to authenticate its communication also by digital signature, where the SSC is required to furnish return under digital signature. And in some cases where the SSC is not required to file the return under digital signature, then in the regular electronic verification mode in the prescribed manner. So by and large, it's all electronic digital signature based communication from NFSC as well as from the SSC side. Then all notices, orders, communication shall be delivered by way of, now this is important, delivered by way of placing it in SSC's registered account, sending to the registered email address of the SSC and uploading it on the SSC's mobile, and followed up by a real-time alert or SMS. Now this is what the provision is all about. So therefore, if the communication has been signed, but there is no follow-up or real-time alert is not there, then once again that would be a faulty communication on the part of the department. These items are defined items. We will come to that in a moment. All communications with persons other than the SSC will be the registered email address followed by a real-time alert. SSC to file his response to the registered account. Acknowledgement containing hash result is final. Now this is important, friends. When we were filing the papers at the Tapal, we used to get a thappa, and that was the final evidence of our having filed. Here there is going to be no thappa. Here what you have is an acknowledgement which contains a hash result. What are these hash results? That hash results are the counting of the bytes that you have of the documents that you have filed. So therefore, whatever documents you have filed, there will be a count of the bytes, and that is the hash result. Not a single byte can be changed. If there is any tampering with that document, the hash result would change. And therefore, the acknowledgement which has the hash result is your final acknowledgement, is the final evidence of your having filed the papers. So having said that, therefore, are the requirements of section 282 overridden? So we know that section 282 is a provision today in the law which says how the notice is to be served. So that we are told that the notice has to be served by post, by courier, by affixing at the last known address, etc. Now we are told no, it will be all communication through registered account by email or on mobile app. So that means, does it mean that 282 is overridden? Answer is yes, it is overridden, because 144B section starts with a non-obstante clause, and that is how it will be. So far as the schemes are concerned, there is a slight doubt, but then the scheme itself would say that the communication will have to be made in this manner. Then SSC and AR shall not be required to appear in the assessment proceedings, but SSC and AR may request for a personal hearing where the show cause notice is issued as to why assessment should not be completed. CIT of the concerned regional assessment center may approve the request. Now this is where I have a problem, and this is where we will need at some time now or later, we'll need help of our lawyer friends, that when an SSC has asked for a personal hearing, why should there be a provision to say that the RFAC may approve the request? There is an SOP which has been issued. I'll come to the SOPs a little later. There is an SOP which is issued for personal hearing, and it says that where SSC disputes the facts regarding the proposed variation to income, where the SSC has submitted its written submissions, then personal hearings will be allowed, and that will be allowed only through the virtual conference mode, and that virtual conference will generally not be more than 30 minutes, and SSC may furnish any additional evidence, documents, etc., which he requires to be furnished in that virtual conference. So this is all fine, but the problem is that there is a discretion available with RFAC to allow me or not to allow, and SOP says you will allow only if I am disputing facts. What if I am not disputing facts? I am disputing the legal interpretation, and therefore I need to sit across the table and explain you what is the correct interpretation, what is the case law saying on the subject. I should get that opportunity to get the hearing, but then SOP says no, you won't get a hearing unless and until you dispute the facts. So this is at some point of the time, sometime or the other, you will find some writ petitions also on this issue, and there are writ petitions where hearings are not given. We will have a quick look at it a little later. All examination and recording of the statements exclusively through VC. CBDT required to establish facilities for VC at different locations. So everyone will not have video conferencing facility in his office or in his home, and therefore CBDT is required to establish facilities. Then this is an interesting power to frame standard operating procedures. You have section 144B712, where it empowers the government, empowers the CBDT to frame, frame procedures, etc. Which says SOPs for effective functioning of NFAC, SOPs for service of notice, SOPs for receipt of information documents, issue of acknowledgements, e-proceeding facility, login, assessment, tracking status, etc., etc., general administration, grievance redressal, several areas SOPs can be issued, and that is there is a statutory recognition or the power granted by the statute for the government to form standard operating procedures, and therefore these standard operating procedures which are formed by the government will they do have the statutory teeth, and when they have the statutory teeth, it is open for you to ask the department whether you have followed this SOP or not, whether a high-pitched assessment is made, a bizarre assessment is made. It will be your right to ask the department as to whether the NFAC sent it to the review unit or not. What was the reason why NFAC felt that इसमें कोई review का जरूरत ही नहीं है? It is such a bizarre thing, but NFAC did not send for a review. Why? Why did it? So, what is the decision-making process where you felt that no intervention was required, no review was required, no third umpire was required in this case? So all those things you will have a right to ask whether these SOPs are actually implemented or not, whether these procedures, because these procedures have a statutory teeth in 144B7, 144B712. Computer resource, these are the definitions. Computer resource, I don't think we need to really go into it. All that I can say is that we have found cases where emails, notices have gone on email of a person who has left the organization. This email was there in the return of income, and then in that return, the assessing, the NFAC picked up that email address and then posted all your queries or posted all your notices to that email ID. Now that email is no more valid, or that man is not there in the organization, so nobody knows that this has come. Okay, so now that such things have happened, and when such things have happened, the assessing officer, by according to the SOPs, etc., cannot pass an ex parte order in that case. It will have to go through the email address, various options on the e-filing account. What is your email address? What is your last income tax return file? What is your last revised return file? What was the email in your PAN and Aadhaar database? What is the email even in the MCA website? And what is the email address which is otherwise made available to a department? You might have just written a letter and said that this is the new email address. So they will have to explore all these possibilities before telling you that, or making an ex parte order or something like that. So this is something which is important to be noted. And in fit cases, you can always say that, this was the email available with you. Did you try to send it over here? You have not tried to send it, and therefore it's not a valid service. Then there's a provision which says that at any stage the NFAC may send this back to the jurisdictional assessing officer. So this is an enabling provision, enabling the NFAC to throw away its responsibility back to the file of the jurisdictional assessing officer. And this is intended, this is not, I haven't seen this happening, but this was probably kept as an enabling provision if there are complex issues, if there are large cases, if the technology platform failed and things like that would happen. Then everything goes back to the file of the assessing officer to do everything manually or as per his original methods. Assessments which are not in faceless form are all non-est, except of course cases which are in central and which are foreign companies, etc. Now, something about SOPs. Pursuant to the power, so we have seen 144.7b has a power. Earlier, there was para 12 of the faceless assessment scheme of 2019, under which the CBDT has issued, they have actually issued SOPs. They're not really available in every at many places. I could find it only on 1 or 2 platforms like TaxSutra, etc. I found that. And those SOPs are described as internal departmental guidelines. But though they are described as internal departmental guidelines, as I said, it has a statutory teeth in 144B7, and therefore they can be asked, they can be called, a court can ask them to produce. SSE can ask even in RTI whether this SOP has been satisfied or not satisfied, whether this procedure has been followed or not followed. Although these were under the old scheme, they will have the same teeth under this section as well, because CBDT has issued an order under 119, which says that all orders guidelines which were issued under the 19 scheme will apply mutandis mutandis to section 144B also. So those SOPs will equally apply even to the 144B cases. Now, I'll just quickly run through this outline. You will just have a broad idea of what is going on, what type of SOPs are issued. I need not take you through because they're makes very interesting reading, and I'm sure, and I recommend that each one of us should actually see all these SOPs. There are different SOPs for AUs, assessment units, for technical units, for verification units, or for review units. There's different SOPs. I've just given here the outline, what all things are getting covered. Issue of initial questionnaire, process of issuance of notice, grant of adjournment, procedures to be adopted in cases of non-compliance, issue of penalty notice, etc., etc. So there are in all these they have said, you'll find cases where they have said that no roving inquiry should be made. You restrict your inquiry on the subject matter for which the matter has been selected for scrutiny. They have said that your questionnaire should show application of mind. We have all seen many times the questionnaire or stereotype questionnaire coming. It has come even in the faceless regime. Stereotype questions have come. Questions which are not even relevant to me have come to me. So there is a non-application of mind. But the SOP says that the questionnaire should reflect the application of mind of the person who is drafting the question, etc. Adjournment, 15 days should be allowed initially, and then 7 days, and so many things are there. If we know about it, then in appropriate places we can really ask the department whether you're followed or not followed. Under what circumstances references can be made to the verification unit. So it's not that assessing officer can just throw the file to the verification unit. No, he will have to match the data with what is called an insight database. They have this insight database. They will have to see the data match it with public domain, what is there on MCA site, etc. They will have to look at other regulatory authorities. After having done his homework, then if a detailed verification is required, cross-examination is required, the verification unit comes in. Otherwise, it is the job of the AU to do all those preliminary exercise what he always used to do as an assessing officer. So again, handling approval for withholding of refunds under 241A. You find that refunds are withheld, and you don't even know what has happened. So there's a complete procedure as to whether and an approval system. So that approval system cannot be mechanical. There has to be an application of mind, and therefore, if your refunds are withheld, you have a right to ask for why these refunds are withheld. Why do you think that 241A is essential under the circumstances? It is essential to withhold my refund. Please show me whether you applied for approval. Please show me whether that approval is received. And having seen that, is that approval mechanically given, or is there an application of mind on that approval? So you can always challenge in fit cases, wherever these refunds are withheld without any rhyme or reason. So I need not get into, friends, all these SOPs but these are various areas of where the department has laid down the standard operating procedures. SOPs for handling non-responsive cases. So as I said, they cannot just do ex parte assessments just because you have not replied to one notice. So non-responsive कौन है? There is complete procedure. Have you tried various email communications? Have you tried various mobile numbers, etc., etc.? There's complete procedure for that. You cannot become, you cannot be labeled as non-complier or non-compliance SSE, non-responsive SSE, sorry, automatically. So there are SOPs for verification units for SSEs who have digital footprints and SSEs who don't have digital footprints. What are digital footprints? I have a PAN, but I don't have a e-filing portal. I don't have my e-filing account. I have a PAN, but I don't have the digital footprint. But I may not have a PAN also. So these are the areas where people who do not have a digital footprint and people who have a digital footprint, and verification units will have to get in touch with those people and verify whether it's an SSE, whether it's a third party, etc., etc. Technical units for TP matters, for special audits under 142A, for valuation of assets, for getting information from foreign jurisdictions, for analysis of accounts, forensic, etc., etc. SOPs for personal hearing, I have already dealt with. SSES submitted written submissions, etc. I've dealt with that. So these are. With that, some points to be noted. All orders, circulars, instruction guidelines issued under 290 scheme, mutandis apply to 144. Now there's an interesting information here, that if the assessing officer is seeking voluminous details, okay, and therefore you feel there's a phishing inquiry, because I had in February, March, couple of such cases in our firm where the data which the assessing officer had asked for would mean that I would have to provide him more than 1 lakh line items of data, and then that data would not even get uploaded anywhere, and the difficulty which the president pointed out in the beginning would really happen. But then the point is, if such a voluminous data is sought, then you have this point available that there is an exclusive email ID which is given for grievances regarding such a voluminous data asked, or roving questionnaires which are asked. feedback.notice.neac@incometax.gov.in. Make a note of this, and if you find that what the assessing officer is asking is bizarre, if it is such a voluminous data, how is he ever going to check that data? What is he going to do with that data? I can always say that if you want certain invoices, I will provide you sample invoices. If you want to see certain items, I'll give you the ledger account. You pick up any item, and I'll show you the details of expenses or whatever you want to see. Whole of the expenses are disallowed in some of the cases. Complete. I mean, just all expenses disallowed. Bizarre orders we have found. Why? Because they said that you have given only sample, you have not given all the invoices. So there is a email address available, feedback.notice.neac@incometax. where you can you can raise your voice and say that, look, this is something which is undoable and it's voluminous, and therefore please tone it down. You had a Supreme Court ruling in Ivan Interactive where it was a decision which went in revenue's favor, which said that when a 143(2) notice was issued, it was issued at the SSC's address as per their PAN database, and therefore it said it was sufficient. We had not rectified that database or not updated database is not the department's problem. If it was served at that PAN address, then it's a valid service of the notice. And actual services is immaterial. Now that's a Supreme Court decision. This ruling in the context of the faceless scheme, I think may not hold water under the faceless scheme, because mode of service is articulated in 144B and in various SOPs, as we have just seen, that all email IDs and SMS alert, etc. should be given. Your e-filing portal, etc. Then another point to note is department maintains a database for technical inputs called Insights, and assessing units may use the structured questionnaire to be sent to the SSCs and other inputs from that Insight database. SOP says that the quality of questionnaire must reflect the application of mind and due diligence. This aspect may be kept in mind for arguing matters in fit cases. 15 days for adjournments, 15 days time limit for responding to notice, and adjournment normally 7 days. This is the SOP which is saying. A assessing unit can make request for physical verification to the designated VUs after recording reasons in writing in the following circumstances. So physical verification, high risk cases, PAN fraud or potential fraud PAN, or assessing unit suspects large tax evasion, etc. Physical verification in such cases can be conducted in select cases through designated verification units where the SSC is non-compliant or where the third party from whom information document is collected doesn't have a digital footprint. And designated verification unit means a physically located nearest to the location where the physical verification is required. So an SSC in Mumbai cannot be asked to go to a verification unit in Calcutta. The verification unit will have to be somewhere near the SSC's location where the SSC can appear, or the third party's location where the third party can appear and produce whatever he is required to be produced. Limited scrutiny cases, the AU shall issue additional questionnaire only after principal commissioner's approval. If a new point of dispute arises that is inextricably linked to the issue involved. So you know if it's a limited scrutiny case, which earlier it used to be told. Now I'm not sure whether it will be told to you in the notice or not. In that case, it can be only selected for additional questions can be asked only with the approval. So you can ask whether that approval is taken or not, and whether that approval is taken mechanically or whether that approval has to be taken after application of cases of 148. Now this is an interesting aspect. You see, there are decisions under the there are decisions of the tribunal where there's one Gujarat High Court which has not come out in this slide, 307 ITR 115, where the reason for reopening was given by Officer 1 and the notice for reopening was given by Officer 2. So there the Gujarat High Court said that the notice will have to be issued by the person who has given the reason. I mean, the person who records the reason only issues the notice. If the person who has recorded reason, he is the person who is satisfied, how can another person issue a notice? That is fine. But there are two tribunal decisions which goes a step further, and this was a case where 148 was initiated by an assessing officer in Ludhiana, and this is the Amritsar decision, and similar were the facts of that Agra decision. 148 initiated by assessing officer in Ludhiana. It was completed by another assessing officer in Jalandhar. And the tribunal benches said that this is invalid and this order is bad in law. So the question arises in the present context that the 148 issued before March is by a jurisdictional assessing officer, and the 148 will be completed after March by your faceless assessment. Is that valid or is that not valid? Can the ratio of these decisions apply or not apply? I don't think that this ratio can apply, even if this ratio is a correct proposition of law. Assuming it's a correct proposition of law, I don't think it can apply here in the faceless case because there is a concurrent jurisdiction. There's a circular which provides its concurrent jurisdiction to the jurisdictional assessing officer as well as the faceless scheme, your AU under the faceless scheme. And the statute itself now recognizes that such reassessment will be completed by NFAC, as we saw in the provisions of 144B, and therefore you can't say that this is now. There may be some questions in the earlier law as regards the jurisdiction, but here because of concurrent jurisdiction, there is no difficulty at all. Recent case laws, caveat filed in the Bombay High Court in cases of challenge. So Bombay High Court, nobody can get away with an ex parte order. Department has filed a caveat. There was an old decision of the Madras High Court, and I'm putting this before everyone only for one reason. This Madras High Court, where it was a February 2020 order, case of demonetization, cash was deposited and SSC claimed it to be out of the balance on hand, and the department treated it as unexplained. So High Court, after going through the facts, noted the limitations of e-proceedings. Neither the SSE had represented properly, nor the department had seen the facts properly, and the matter was sent back for proper examination. In the process, the High Court noted the limitations of e-proceedings, and High Court said that the SSE will now provide proper submissions. So the point to be noted, which I said in the initial part, that there is a great importance for proper submissions, your written submissions, pagination of papers. You will have to file your paper books like you file paper books before CIT appeals and before your tribunal. Cross-referencing of the material, because you are not going to be sitting across the table with the assessing officer to explain him कि भाई ये paper देखो, वो paper देखो, ये पन्ना दिखा दिया, ये entry दिखा दिया, matter खत्म हो गया. No, he will have to see himself. Now, how he will see himself? What you would have told him across the table, now you will have to tell him in writing. So therefore, cross-referencing in your written submissions, explaining the ledger dumps. I mean, I have seen corporates just filing the ledger dumps, and ledger dumps, it's difficult to understand what is there in your ledger dumps. You will have to explain what columns you are talking about. You will have to say what column you will have to see. You will have to say which entry you will have to see, and therefore explaining it properly. Reproduction of important paragraphs in the agreements, documents, decisions, asking for personal hearing, etc. So there's a great importance of proper submissions to be made, because otherwise the matters will go to the courts and courts will send back the matters once again. That is why I have just pointed this Madras decision. Now, important decisions, I'll not, we don't have much time. I'll run through the headings. Cases under the, now these are all under the faceless assessments, okay? Assessments which are passed without issuing show cause notice or a draft order. Delhi High Court, in one case it is stayed, in one case notice is issued to the department, in one case the order is set aside. So assessment passed without issuing show cause notice and draft orders. Bad. So instead of going for appeal, they went for a writ petition, and the writ in the writ court partly succeeded where stay is granted, and where the matter is completely set aside, fully succeeded. So even if there is in theory there is an alternate remedy, that the order has been passed without show cause notice, I will go to CIT appeals, but when I go to the CIT appeals, it will take its own time, there will be demand pressure and all sorts of things will happen, and therefore I effectively do not have a remedy, and therefore in large cases it may be better to go in a writ petition like that. So assessment passed without issuing show cause notice or draft order. Second, assessments made without adverting to the SSA's request for adjournment. You give me only 3 days time. Yes. You give me only 3 days time, and I asked for 10 days time. You have not given me that time, and you have passed an assessment order. Cases like that, Kerala High Court, Madras High Court, Delhi High Court, these decisions are there, where in fact Kerala High Court said prima facie the order suffers from perversity as well as non-compliance with the principles of natural justice. You can't do that. You can't just give 2 days, 3 days time and pass an order. So these are the cases which have gone to the courts. Then assessments made without considering SSE's objections or response to the show cause notice. So without considering SSE's objections and show cause notice, if the orders are passed, go to the writ court, get the order set aside. Then assessment passed without granting personal hearings requested. So SSE has requested for personal hearings, and that has not been granted. So in all these cases, SSE has succeeded in one way or the other in getting either a stay or getting the order from the High Court. Assessed once again without granting a personal hearing. And here, of course, Delhi High Court decision in Ritnan Education Foundation, which set aside the assessment order and directs the revenue to proceed from the stage of show cause notice. Though the petitioner SSE has relied on, now here the SSE relied on the SOP, but interestingly the department counsel says that I don't know SOP. So High Court says that High Court will have to presume that no standard procedures and processes have been formed. Nobody really pointed out that that there is a statutory backing to this, and then therefore these are issued, and they just get away. they got away with it just because it was set aside. And that court said that since the statute itself makes the provision for grant of personal hearing, then that SOP, whether it is there or not there, it is not relevant. Then assessments passed before completion of time granted in the show cause notice. So you grant me a time and you pass an assessment order before that. These are the three cases where the High Court has issued notices to the department, or High Court has quashed the order, or it has set aside the order. Then assessment order passed without granting sufficient time to the SSC to submit the explanation. So all these are the cases where the natural justice principle has been applied, and the procedure followed by the law has not been adopted, and therefore the matters have been set aside. Faceless penalty scheme came into effect in January 2021, 12 January 2021. It states that all penalties imposable under the Act by the officers of the rank, additional and joint commissioners and below. So therefore, if there are penalties to be initiated by CIT appeals, this will not come by a commissioner in whatever 264 or 263. It cannot. Now, interestingly, here they have created national and regional faceless penalty centers. So like your NFAC, you have NFPC. Like your AUs, you have PUs. Like your regional assessment units, you have regional review units, you have penalty review units. Now, so therefore, assessing officer who has initiated penalty will be someone he has initiated and forgotten about it. The penalty which will be levied will be by some other officer. The person who will carry on the hearing will be some other officer. And of course, the CBDT has said in that 20th January order that until the date on which these said units are set up, NFAC itself will act as NFPC, etc. So as of today, we have seen the penalty notices coming only from NFAC. So this is for penalty. By and large, everything else is the same. Faceless appeals, we have seen, so far as CIT appeals are concerned, CIT appeals have become functional. Commissioner appeals, however, we haven't seen many orders being passed by the commissioner appeals. In our office, we have seen only one order so far, which is also an ex parte order. But otherwise, we haven't seen many orders which are passed by the commissioner appeals. They have issued notices, we have given submissions, but we haven't seen the order. We have asked for hearings, but we haven't got any hearings. So far as appeals are concerned, so far as assessments are concerned, we have got video conferences, and we have mixed experience of all those hearings in the faceless assessments. Here again, if for granting a hearing, the same problem that I pointed out in the assessment, that the hearing procedure has to be will have to be approved by the department. It is only if the hearing is approved, then you are granted an approval, that you are granted an hearing. And it's not as a matter of right that all cases you will get, and that is something which is bothering me all the time, that why it is my right to be heard. Nothing but, so far as tribunal is concerned, I am not too sure whether how will tribunal really follow. I wish that the senior members who are here, president and vice president, they could have thrown some light on this, because in a tribunal you have an appellant and you have a respondent, either the SSC or the department on both the sides. So appellant argues his matter, department argues his matter, and appellant has the final word. So any appellant has a final word, whether it's a department or whether it's a revenue. So I give my written submissions in faceless, the other fellow gives the written submissions in faceless, and I once again give my rejoinder in faceless, and so therefore everything I'll have to write. and the hearing which may happen in 15 minutes, that hearing may take more than 15 days. It may take a month also, because writing something and putting it down will take its own time. So faceless tribunal, to my mind, seems to be a very difficult proposition. There are writ petitions which are filed for faceless appeals, and they are basically on the footing that this is Delhi High Court in Lakshya Budraja, where writ petition has been filed, and the petitioner's case in the writ petition was that it is discretionary. The approval of the commissioner. Why should there be an approval of the commissioner or DGIT for a right of being heard? This is completely contrary to section 250 of the act, which requires a person to be heard. Now here there's a problem, because the word hearing has been defined in the Income Tax Act to mean even electronic data. So there's a problem over here, but nonetheless, the matters have reached the high courts, and interim orders have been passed, and the hearings are fixed at some later dates. Faceless ITAT has been also challenged, and the main grounds are that this is against the concept of public hearing. There is the amendment has been made in the law without any debate and deliberations, and it affects the right of effective representation. There has to be an intensive cross-questioning, free and open exchange of ideas and views. Those of us who have appeared in the tribunal, we know that there is a free flow of discussion. Not only, free flow of discussion with the members. It's not necessary that both the parties argue and the members are quiet. No, the thoughts are exchanged, the questioning is done, cross-questioning is done. That will all not really happen in a faceless scheme where you have to write down everything. And but then here, unfortunately, what happened is that instead of deciding this matter, the Delhi High Court disposed of the writ petition. Why? Because the government had already received representation by this very petitioner, and therefore the court directed the government that you please dispose of this representation which is made by the SSC, by the petitioner, and you dispose of that, and then we will see later on. And therefore the court never decided on this issue, and what will happen to that representation, we don't know. So friends, I have tried to cover the broad, big aspects of this entire scheme and the practical aspects to the extent possible. If there are any questions, I'll be happy to take it. Otherwise, thank you very much.
Thank you, Yogesh bhai, for taking us through these detailed provisions and also weaving the settled legal position with the new provisions and how it will reflect on it. Mishra ji, can you please, Mishra ji, कोई question है तो जरा screen पे डालिए.
In the meanwhile, Drushti, I have a couple of supplementaries to make. As far as this faceless hearings is concerned, particularly tribunal hearings, there is great reservation, and learned speaker has also pointed out. So President ICI had a meeting with Finance Minister requesting that at least ITIT let there be no faceless hearing or faceless manner of decision. But then we were informed that faceless is the philosophy of this particular government in order to avoid corruption and those things. Therefore, you have to mend your ways and faceless will remain. So that is one information. And yesterday only, I think tribunal has come out with e-portal for filing the appeals at least electronically. So that is another thing. And as far as CIT appeal decisions are concerned, they are not coming for past considerable time. So I had discussion with a member of CBDT informing him this particular position. And he has asked us to give note on this particular aspect, and they will also be responding why the decisions from CIT appeals are not coming.
But are the CIT appeals giving a virtual hearing or not? Because we haven't come across any virtual hearings on CIT appeals.
Like in tribunal, if you demand and if they feel that it deserves, they are giving hearing.
Okay, but okay, we have asked in almost every case where we have filed written submissions, we have asked for personal hearings, but we haven't received any. In since January, February, since this started really took off, we haven't received any personal hearings from any CIT appeals, no communication whatsoever. So that is a cause of concern. We don't know what is happening over there.
Yeah, that is what we have taken. appeals
Yes, so there
before
are
the
some
civil.
questions which we, sorry.
Sure. Yeah, sure.
There are, if you can see the questions which are posted
Yeah,
on the screen.
yeah, I can see the question. Whether notice to reopen the assessment posted on income tax portal only should be responded. No email or physical copy of the notice is issued. So, so the notice to reopen, now this is under the old law or under the new law. If it is under the old law, that notice has, this notice has come on your portal, it will have to come if it is under the old law, it will have to come on your on the email ID as well, and that notice will be from your jurisdictional assessing officer. Uh, it should be responded means if you have notice of it, you have to respond to it. But if you have no notice of it, I mean, if an alert has not come to you, then to my mind, it is not a valid service, because it's putting it on the portal without giving you an SMS alert or an email alert, then it may not be a valid service, because that alert is definitely, real-time alert is definitely essential. But if that alert has come to you and you have missed it, then you have missed it big time. So I think if you know that it has been posted on the portal, you have to respond. Otherwise, because when you have accessed the portal, when you have seen the portal is known to, it is recorded in the portal. The moment you access the portal, there is a system of your, I mean, it picks up the time when you have actually seen that. So I think, yes, you should respond if you know it. Then on receipt of show cause notice, along with draft assessment of the SSC, responded to every issue on denial of exemption of income, both on the facts and the law, by citing number of favorable judicial cases. The AO, without dealing with the SSC submission on each issue, by simply stating that the SSC submission are considered and not acceptable, pass the final assessment order without issuing final draft assessment order, whether such assessment order can be passed. So so therefore it's a case where you have made your submissions, but those submissions are not considered at all. It is said in one line that they are considered, but you don't find it in the operative portion as to how they are considered. And therefore, once again, those examples of writs that I have given will help you. If the stakes are very high, go in for a writ and get that order set aside, at least for a fresh hearing. Then whether the assessment unit knows the name and address of the, obviously they will know the name and address of the SSC, because otherwise how do you, this is not like an examination question paper that you don't know who the student is. You have to know who the SSC is. Without knowing who the SSC is, you can't really make an assessment, but the SSC would not know who the officer is. In set aside cases by ITAT for limited purpose of verification whose jurisdiction is vested, set aside cases of ITAT for limited purpose of verification. So all your giving effect orders are all, and set aside orders, there is an enabling section today, but there is no scheme, and therefore it will go to your jurisdictional officer only. Huge additions made by the AU without providing data available with the AU defying natural justice. Appeal have been duly filed before CIT appeal. Issue is payment of 20% of the demand, which runs into cross. One way is to file stay appeal. Any other solution? Writ petition. Stay obviously you will have to file, because stay you will have to file under 220 subsection 2, subsection 6 before the assessing officer. He will reject it, and you may have to file the stay before commissioner. But that's a long process, and you can definitely go in for a writ like this, that defying natural justice. You have seen all those case laws are of the same type that you are describing. How does the faceless assessment scheme is actually working in practice? Are competent and diligent officers assigned for various tasks, or they are routinely providing the work of AU in NFAC, taking any remedial action in case of high-pitched assessment action is being taken against the delinquent officer? I think we shouldn't be asking such questions, because every chartered accountant is supposed to know the Chartered Accountancy Act, Chartered Accountants Law, income tax law, right? In the same way, every officer is supposed to know what his duties are, what he's doing. So if you feel that he has not done a proper job, then you have legal remedies available for that. Does NFAC keep SSC's name and contact details confidential so that AU, VU, and others have no clue? It is not possible, because जिसका return है, जिसका balance sheet है, he obviously knows who is the SSC. Does SSC has a right to know whether AU has referred the draft assessment order for review? So as I said, the entire procedure is there, and if you feel that that an assessment is not properly made, you can definitely ask NEAC, NFAC that what is, this is a bizarre sort of a thing which is done. Did you go for a review? If you have not gone for a review, why did you not go for a review? What is the reason? What is the rationale? You would have documented it somewhere. Please show me. You can ask all those, whether the entire procedure of 144B and all the SOPs, whether they are complied or not, you can ask in RTI definitely. Does SSC has a right to know whether AU has referred the draft assessment order for review? Yeah. How can we come to know that the whole procedure as depicted in the flowchart is followed? It is presumed that they will do it, but if you have a grievance and if you have reason to believe that it is not followed, then you can definitely ask. Can addition be made on an issue which is not mentioned in notice under 143(2) as an issue on the basis of which the case is selected for scrutiny? As I said, that it can be done only with the permission of the principal commissioner, and therefore you can ask for that permission of the principal commissioner and see whether that approval is a speaking approval or not. Can you scroll down, please? Number 11. Or these are the only questions.
So I think that's it. So we have put up 10 questions because the questions are not ending. Everybody is facing a lot of issues. But we also have the other sessions, so I think we'll have to curtail.
Just one more submission. See, there is a lot of inquisitiveness about whether AU knows who are the assessee, etc., etc. Let me tell you that we have received certain complaints that from Delhi, certain mediators are calling the chartered accountants that, okay, this and this case, this is your turnover, these are the questions which are asked. So whether you want soft treatment or hard treatment, something like that. So we have sounded it to appropriate authorities, and actions have been taken to those errant officials who were leaking such information and trying to contact the assessee directly. So that also let us place on record. Thank you.
That's very good.
Thank you very much, sir, for the update. May I now request our past chairman WRC, Preeti Savla madam, to please propose a very well-deserved hearty vote of thanks for the session. Preeti madam, over to you.
Thank you, Drushti. Chairman WIRC. Am I audible?
Yes, yes.
Chairman WIRC, Manish Gadia, CCM CV Chitle sir, and all my dear participants. All of you will agree that as a batsman of first technical session, Yogesh Thar sir has taken a century on this very important topic of faceless assessment and litigations, which will be applicable to almost all practicing chartered accountants who are practicing in direct taxes. Yogesh sir, on behalf of WIRC, entire team and all participants, I propose a very hearty, well-deserved vote of thanks, and thank you from the bottom of my heart. Thank you very much for accepting our invitations and taking the session. Thank you very much.
Thank you. Thank you. My privilege.
And we had pleasure of having face-to-face hearing on faceless assessment. That is of it. Thank you.
Thank you. My privilege.
Thank you. Thank you. Now we will be moving on to the next session, and this session is on charitable entities, the provisions relating to charitable entities. We know that there are many changes which have happened in these provisions. Even on the corpus donation front, there are many changes, and it's going to really make a big difference to the charitable entities. Also, re-registration is also there, where there are so many requirements. We have with us our Central Council member and Chairman of Direct Tax Committee at the Center, CV Chitle sir. He is the chairman for the session. Chitle sir, can we just get some guidance from you? Thank you. Over to you, sir.
Manish, with the permission, I'll leave.
Sorry.
Thank
you. Thank you, Drushti madam. For the purpose of guidance, I think we have learned faculty, Honorable Past President C.A. Sunil Talati ji. So guidance part, I will definitely leave it to his fold. Coming to the topic of these charitable institutions, their taxation, as we are aware that Section 10 and Section 11, 12, 13 takes care of these various provisions. earlier it was easier that, okay, you demonstrate that your application is for the purpose of charitable or public religious purposes, and then you were able to access the exemption. However, in the recent past, considering various malpractices and misuse of the charity of exemption made available to these institutions, I think government has tightened up these provisions. And particularly in past couple of years, substantial provisions have been added in order to claim that exemption. As we know that various provisions available for computation of income from business profession, maybe depreciation, whether you can claim depreciation as well as capital expenditure, that stands clarified. Provisions like section 48(3), non-deduction of taxation, etc. So all those provisions have been now incorporated. Typically, in faceless assessment, now in faceless, it is being also observed that even there is slightest non-compliance, I think the harsh steps are being taken of disallowing registration and making additions. And particularly in Delhi, this particular procedure has started. Maybe in due course of time, everybody will start doing that. Even if small amount of only a couple of days ago, we had some discussion at council along with certain experts. So we were informed that the charitable institutions from Delhi, which was having activity of more than 20 crores, it made donation of 6 lakh rupees to some other charitable institution, which was not in keeping with the curriculum or whatever direction available for charitable trusts. And there the registration was sought to be not only sought to be withdrawn, even they withdrew it. So the trust had to go to Delhi High Court. And considering this volume, and fortunately the trust to which donation was given used it again for educational purposes. So once again that registration was restored. So I am only pointing out that there are a number of complexities now surrounding this particular topic. You cannot take charitable institutions taxation very lightly. Otherwise, these consequences follow. Unfortunately, with number of charitable institutions, expert and professional advice is not available, and at times trustees or those who are guiding the charitable trust are not so careful that they remain within four corners of law, and therefore there are certain transgressions, and that need to be minded by those charitable institutions. Just to inform you, like in Pune, we have a number of charitable institutions celebrating Ganpati Utsav. And what happens in next year when the year gets over, nobody bothers about accounts, etc. When they have to put up the pendal, they make application to the municipal authorities, and because municipal authorities demand audited statements of account, they go to the auditor. If this is the state of affair as far as managing the charitable institutions is concerned, I think it needs to be regulated, and to that extent, if the government is taking certain steps, it is welcome. We have to also guide those trustees who are managing these activities. And in order to guide, I think as a professional, we should know all the nitty-gritties of taxation of charitable institution. And I really compliment Chairman Drushti of this committee, Chairman WRC, for selecting this topic for the purpose of discussion in our direct tax refresher course. I am sure, and the speaker, Honorable past President CA Sunil Talati ji is also very well versed and well known in field of taxation for his knowledge and deliverance. So selection of faculty also you have done in a most choicest way. So with these words, I comment this particular session, and I welcome Honorable Talati ji to address us. Maybe I hand over back to Drushti ji.
Thank you, sir. Thank you very much, sir. So for solving a lot of issues of the members, we are also running this help desk that Manish bhai talked about earlier, and we would have solved more than 200 queries. Experts are replying within 24 hours. We also, sir, sent you a representation for certain, conditions to be complied, subject to which the provisional registration is granted. So we have also sent you a representation, sir. Just if you can look into that also and take it up, that will be really very useful to the members. Moving on.
react to this, that those trusts which are already registered on 31st of March, they are also getting provisional registration, and there are number of such other issues which are errors at the end of CBDT. We have already represented, and maybe we will get clarification within a week's time, as I expect. Even I would request WRC that before charity commissioner, chartered accountants are not allowed to represent. I have already talked to the minister. If official representation is made, that will be better, allowing audience or representation by chartered accountant before charity commissioner. That is also one issue WRC can consider. Thank you.
Sure, sir. Thank you very much for your guidance.
Place a good suggestion on this. Recently, the charity commissioner has taken over in last 10 days only. Pramod sir, we have personally met and we have already represented on this. So he is new to the post. So he said, give me some time. I'll get back to you on this.
Yes, I have already discussed with Minister. We'll talk offline.
Yeah, thank you, sir.
Now, moving on, may I request Murtuza Bhai, Regional Council member, to please introduce the faculty for the session, our past President CA Sunil Talati, sir. Murtuza Bhai, over to you, please.
Thank you, Drushti madam, for giving me this opportunity. Such a massive program and such a great personality. So, CA Sunil Talati, Chartered Accountant, was elected as the President of the Institute of Chartered Accountants of India for the year 2007-8. And before that, he served as Vice President for the year 2006-7. It was like for the first time in the history of ICI that a CA from Gujarat was elected as a President. Sunil Talati is a MCom LLB FCA and he graduated from HL College of Commerce, and he has held various posts of office bearers at like in multiple places in Rotary Club, Junior Jess and Junior Chamber, and he was elected as the first Rotaract Governor of India and then was appointed as National Chairman of the Council of Rotaract Governors. He is doing practice under the name Talati and Talati LLP, having office at Ahmedabad, Anand, Baroda, Surat, Mumbai, Cochin and Delhi. And he had been executive member of Income Tax Bar Association in 1980 and Chartered Accountants Association, Ahmedabad and Sports Club of Gujarat Limited, and in board of Karnavati Club since inception. He was appointed as public representative in the governing body of Ahmedabad Stock Exchange by Government of India, Minister of Finance in 1985 and 86. He was elected President of Chartered Accountants Association Ahmedabad for the year 88-89. He has written several papers on tax law and has given talks on various seminars and conferences. For almost 20 years, he was a co-author of the Ready Reckoner, which is published in Gujarati. He was regularly contributing articles in Financial Express and was regularly writing as a contributor and editor in monthly Gujarati book called Tax Reporter. He was elected as a member of Governing Council, Accounting, Auditing and Bookkeeping Services Sector governed by SCPC, set up by the Ministry of Commerce and Industry, Government of India, consecutively for 3 terms. In 2017, he has been appointed by Government of Gujarat as a member in the Fee Regulatory Committee for All India, all medical colleges in Gujarat. He has also been appointed in the Special Committee of Coal India Limited for considering valuation of all coal mines. So with that, I request and let us all welcome CA Sunil Talati, Honorable Past President of ICI. Sir, over to you.
Just before that, Murtuza Bhai, even Sunil Talati ji is involved in export of CA services to CA services abroad, and government has appointed him as an office, and institute has entered into MOU with the office where Sunil Talati ji is nominated by the government, and it is working for export of CA services. So I'm glad to inform you that also. Thank you.
Very good. Yes, sir.
Thank you so much, Mr. Murtuza, for a very elaborate introduction. In fact, in all humbleness, I am requesting the same is not required. But I feel it is more than 15 years that I was elected as a president. So youngsters and others might have forgotten me. And therefore, you are trying to refresh their memory and giving this elaborate introduction. Thank you so much. Thankful to Chairman Manish, more thankful to Drishti Desai and all other office bearers for giving me this opportunity. to share my some knowledge and experience on this important aspect of charitable trust. And Mr. Chitle very rightly mentioned with regard to the need of regulating and monitoring the various charitable trusts that are working across the country. And he rightly said that yes, there had been cases where charities were used, I should say misused, by several people for accumulating personal wealth, for transferring shares of the company which they were holding in the guise of charitable trust, and some luxuries are being enjoyed by many charitable trusts. I'm aware of cases, my dear friends, where refrigerators and air conditioners and televisions are being purchased in charitable trust, and I don't know which trustees are using them for what purpose. I have cases where medical charitable trusts or hospitals are buying Mercedes-Benz van. Whether they are being used for the patients or for the trustees, income tax is not able to verify. And it is for the auditors also to sometime comment upon that. Be as it may, the important point is that yes, just because such charitable trusts are being misused by some few, maybe 10% or 20% at the most, other 80% have to suffer. But that's the advantage or disadvantage of democracy. And because these are being misused by some or few, this various regulations under Income Tax Act and several other acts. Let me next slide. Let me next go to the fundamental principle, as our beloved Mahatma Gandhi has said. The best way to find oneself is to lose yourself in the service of others. Service above self. Charity begins at home, as we said. Charity, voluntarism, welfare, development were living concepts, even when formal means of organization were absent. So the concept of this charity is there even prior to establishment of Charity Act or Income Tax Act provisions of Section 11, etc. Next. India has a very long history of civil society based on the concept, as I mentioned, of Dan, Seva, and has long established traditional engagements. As per Bhagavad Gita, Shlok 18, Adhyaya 18, Shlok 6, act of sacrifice, charity and penance, not to be given up, but should be performed. Indeed, sacrifice, charity and penance purify even the great sounds. And this is what is happening in most of charitable trust. लोग मानते हैं कि अगर मैंने अनीति से 2 नंबर का पैसा कमाया है, गलत पैसा कमाया है, तो मैं दान करके इसको शुद्ध कर दूंगा. और कई लोगों को ऐसा मानना है कि दान करने से मेरी अशुद्ध धन शुद्ध हो जाती है. Maybe even on that concept, charity has been developing in our nation to a larger and larger extent. No matter how strong and self-sufficient the government is, but always needed help as well as collaboration from civilized society. And this time, friends, though government is spending millions and billions of rupees on COVID, we have seen hundreds and thousands of charitable trusts, hospitals, and institutions have helped to a great extent in supplying oxygen, supplying ventilators, supplying medical vans, ambulances. And but for this charitable trust, government would have felt substantially bigger hurdles and problems. So that's the importance of charitable trust in our country. Traditionally, civilized society, as per their respective case, and is caste and custom, perform the act of charity, but an unorganized manner. Therefore, to get these groups organized, various trusts and societies were enacted as national and state level. So as I mentioned, charities was continuing, but they were not organized. And to make them organized, systematically working, various enactment has been enacted from time to time. So what is the constitutional framework? Next. Next. Next slide. Next slide. It is a state of well-being, how these entire things are developed. Next slide, please. I'm just missing some slides purposely so that we can go to the subject proper. Next. Initially took the charity, philanthropy, construction of temples, dharamshalas, shramdan, anandan, vastradan, gyandan, took a concrete form with the appearance of Swami Vivekananda and setting up of Ramakrishna Mission. The mission is providing services in the field of education and health. So you can understand for how many hundreds of years before the concept of charity was prevailing, under various forms and formats. And that from time to time has changed, improved, and extended. Next. This is the constitutional framework. Charity is a concurrent subject as per 7th schedule, list 3, item 28 of Constitution of India. Many of you might not be knowing this, which means that both central and state governments are competent to legislate these charities. In practice, charity is primarily considered a state subject, although presently there are both central and state laws. There is not a single central government legislation. Instead, there are 3 separate laws for non-profit registration. Charity may take form of a trust, an endowment, a society, a non-profit organization, and for the purpose there are 2 central enactments. We have Indian Trust Act, and then there are state laws, Bombay Public Charitable Trust Act, we have Gujarat Public Charitable Trust Act. But this is important because you must have seen this last week when the detail of income of President of USA and Vice President of USA were published. You can see Biden had donated substantially to the charity, and more than that, the Vice President lady had donated more than what President of USA had donated. So this concept of donation, getting deduction in income tax and paying lesser tax is also very important aspects for the purpose of regulating the provisions of charitable trust. Next. So what are various legislations for that? We have Indian Trust Act, we have Charitable and Religious Trust Act, Religious Endowment Act, Charitable Endowment Act, Society Registration Act, and then Income Tax Act, Companies Act, Foreign Contribution Regulation Act. This is very important, FCRFNs, because many trusts are receiving donations from foreign countries. And particularly for some community, those who are receiving donations from Arab countries and other countries, and they in turn, under the name of charity, were being misused for enlargement and engagement of the religion, for conversion, etc. This provision has been introduced of Foreign Contribution Regulation Act. And the amendment in 2021, where compulsory everyone has to open the account with State Bank of India, and then it will be regulated, is a fantastic change which has been brought in by this government. And we all chartered accountants must appreciate that how foreign contributions now will be regulated through the provisions of various charitable trust act, who are receiving donations and in turn spending for the purpose for which such foreign contributions are received from time to time. The next slide. So as I mentioned in the earlier slide, there are 3 kinds of charitable trust or charitable entities that can be formed. One is charitable trust per se, second is society, and third is earlier section 25 company, now section 8 company. So I have given the entire table. I will be sharing this slide for you for your appreciation. What are the legislation? What are the jurisdiction? Who can register? In Gujarat, both charitable trust as well as charitable societies are registered by the charity commissioner, whereas in Maharashtra it is not so. 2 separate entities are there for separate registration. So what are the members requirement? What is the board of management? What are the rules and regulations? This table will allow you to appreciate how 3 different kinds of NGOs or different kind of charitable trust in different formats can be formed. It would depend on person to person. Asking me personally, I would always say very strongly that instead of society and section 8 company, the registration and formation of charitable trust by executing a charitable trust deed is simplest and easiest form to start and commence the charitable activities. Next. So with this brief introduction, let us appreciate the meaning of the trust. It's a relationship in which a person or an entity holds legal title to certain property, but is bound by a fiduciary duty to exercise legal control. Imagine a person is settling a trust, maybe during lifetime by giving a huge donation, or by will leaving millions of rupees or billions of rupees in a charitable trust, and to whom he is handing over? To the trustees. Most important point, friends, for all of you is to see whenever you execute a charitable trust or guide someone or be a trustee, the trustee should be of absolutely undoubtful character, sincere, devoted, and selfless. If these characters are there in charitable trust, I can assure you no irregularity, no fraud, no mistakes, no other breach of law would take place. But that's most important role with regard to the trustees of a charitable trust. And for whose benefit the trust is settled? For the benefit of one or more individual or organization who will hold equitable title. So it is different than a private trust. Private trust is always for a limited person, group of person, son, daughter, wife, nephew, niece. It's for a private purpose. But we are talking of public charitable trust, means for the public at large. And public at large means not necessarily hundreds and thousands and millions should be there, but even a group of people is sufficient to have for the purpose of charity. And that is a decision of Gujarat High Court in case of Rana Communities Association, where the trust was settled only for a limited community of Ranas. ITO denied that and said, I will not grant you the registration. Matter went up to High Court and confirmed by Supreme Court that a group of people is public and therefore it is allowable as a charity commission. So a charity trust for Jain, for Khadayatas, for Vaishnavas, for Brahmins, for Kshatriyas, but for a larger group, not of limited, will certainly be allowed as a charitable trust and registration will be allowed. For that matter, we all know Chartered Accountants Association, Ahmedabad or Bombay Chartered Accountants Society, though limited for 1,500 or 3,000, 5,000 members, they are charitable trust. But it is effectively for public at large, community of chartered accountant at large. And therefore, such kind of trust would be always available. Asking me personally, I would say, if not required per force, avoid mentioning the purpose of the trust by mentioning that it is exclusively for the Jain sadhus, exclusively for Brahmin sadhvis or sadhus. Mention for the public at large. And thereafter, trustees can use it for a limited community, limited group, limited people as they deem fit, so that there is no problem with regard to the registration, both from Charity Commissioner as well as from the Income Tax Department point of view. I'm not saying trustees must necessarily do it, but if the object is sometime limited, mention that you are doing only for Jain sadhvis or Brahmins of a particular caste community or particular area or of a particular village, there may be case by some assessing officer or assistant commissioner, he would be tempted to reject it. For that matter, in Gujarat High Court, another matter went into Gujarat High Court, where a trust was settled for giving grass and feeding to various cows and buffaloes. To unfortunate luck of the trustees, the assessing officer was not a non-Hindu person. And he said, we are killing cows and buffaloes and we are eating them. How come giving grass and feeding the cows and buffaloes is a charitable activity? And he refused the registration. Again, the matter went up to Gujarat High Court and High Court said that no, feeding animals, giving grass to cows is a charitable object and it must be registered under Charitable Trust Act and under Section 11 of the Income Tax Act. So this I mentioned, friend, only to allow you to appreciate that larger the objects in the trust need is better. And then if activities are limited for a few, not necessarily in writing, but by action, the purpose would be served and you will be in a position to avoid litigation, possible litigation. Next. Having understood the trust, let us understand relevant definition. Next. Oh, you missed the slide. It seems there is some mistake in the slide. Now let me deal with that. It is relevant definition. Kindly ignore this slide. It is relevant definitions. Trust definition is nowhere defined under the Income Tax Act. And if you are for comfort, if the slide is not coming correctly from the branch or WIRC, let me go with my process of the slides which I had given. Trust is nowhere defined in the Income Tax Act, either in the Bombay Public Trust Act or under Gujarat Public Trust Act. It is defined in Section 3 of the Indian Trust Act. A trust is an obligation annexed to the ownership of property arising out of a confidence reposed in and accepted by the owner or declared or accepted by him for the benefit of another or another and the owner. So a settler will give the settlement for the favor of public in the hands of the trustees. A settler himself can be trustee. Be very clear. A settler cannot be a beneficiary. That would hit Section 13 and also the basic concept of charity. But a settler can certainly be a trustee, so that till he lives, he can do and various activities as per the objects of the trust, being a person who has given substantially. The next point is trust is a legal obligation. And as per Section 1, explanation 1 to Section 13, Clause 2A of Section 224, it includes any other legal obligation. So be very clear, when you are a trustee, you have a legal obligation to comply with the laws and rules and regulations, both that is prevalent under Bombay Public Trust Act, Gujarat Public Trust Act, as well as under Income Tax Act. So there is a legal obligation attached and you cannot escape it. It is always a pleasure and privilege to be the trustee of big charitable trust running school where people will touch your feet to get admission, or in a big dharamshala where they will request for your recommendation for a room or a hall. But then, mind well, along with these privileges, there are obligations, and that is very important. And if the trustees fail to do those obligations, their consequences will be the legal actions under the appropriate laws. Having understood that, let us understand what is charitable purpose. Relevant definition. Charitable purposes earlier were only for relief to the poor, education, medical relief, and advancement of any other object of general public utility. So be clear, relief to the poor, education and medical are specific. But the fourth object, advancement of any other object of general public utility, is very by and large. And therefore, section 2 into bracket 15 was amended that if a trust is having this object and then they are earning income by charging fees or other kinds of levy, then they will be hit by the section and exemption will not be available. So it is very, very important to draft your charitable trust deed accordingly, by which you do not invite the hit at the very first stage. And more important than that, my dear chartered accountants, important is when you classify the expenditure, be clear that you are classifying them under education, you are classifying them under medical, or under the help of relief to poor. And only when the expenditure do not fall in these three categories, then and then only you take them under any other object for general public utility. Besides these four, other new objects which have been added are yoga, medical relief, preservation of environment, including watershed, forest and wildlife, and preservation of monuments or places of object of artistic or historic nature. These have been amended just before 5-6 years, and that is very important. I think the slide is not coming clearly. Let the person who is handling the slide take to the relevant definitions. Slide number 8. Next important is with regard to religious purpose. Charitable trust could be of two kinds. One is exclusively for, as I mentioned, education, medical relief, poor, advancement of other objects. Second could be religious. A temple, a mosque, a gurudwara, dharamshala for limited kind of people where certain people of certain religions would come and stay. For Jain, you have various places where sadhvis and sadhus stay. In same way, in other community also they have these kind of places where monks are staying. All those are for the public at large. But if it is for religious purpose, it has to be clear that yes, it is for a particular religion. And common parallels of religion means advancement, support, or propagation of a religion and its tenets, worship of idols, and performance of religious festivals. Religions has its roots in faith and doctrine conducive to spiritual well-being. The rites and ceremonies are performed at a certain time and in certain manner. तो सुबह मंदिर में आरती होती है, शाम को आरती होती है, पूजा होती है, 3 दफे 4 दफे भगवान के ऊपर जो कपड़े और गहने हैं वो बदले जाते हैं. All those rituals, then in temple all these brahmins or sadhvis or monks are being feeded. They have their breakfast, lunch, dinner, they stay overnight. All this would be covered under that. The next slide is instruments creating evidences of public trust. Now this is most important, friend. I think slide is not with me. Unfortunately, a person is not able to appreciate what I'm speaking. Please take to the slide. Instruments creating evidences the public trust. Instrument creating and evidencing public trust. There has to be a trust created by a settler in writing, as I mentioned, and or secondly, it could be by a will also. So if a trust is settled by will, the trust will come into existence after the death of a person. Or if it is settled during the lifetime, it would be as soon as the date is mentioned. And drafting of the trust deed is very important. But important point here is, friends, in Maharashtra, as Chitleji mentioned, there are many trusts who were created in 50s and 60s, in 70s without a trust deed. They are doing Ganpati Puja, they are doing in Gujarat, for example, Amba Mat Puja and Navratri festivals. There could be Shiva temple, there could be various Matas and Durgas where on their birthdays or anniversaries, various mandaps are created, people come, donate, give prasad, receive various prasad. All those trusts were also are exempted under section 11 and 12. Now what will happen? It's a $1 million question for everyone who are auditors or who are filing returns of income for such charitable trusts who are approved and recognized and enjoying benefit under section 11, but you do not have a formal trust deed. What will happen to them under new regime of section 12AB and form 10A? Though I am dealing with that later on, I am mentioning this at present because if you do not have a valid trust deed in writing and a document in English to be furnished in 10A, I understand it will create a problem. In my view, there are two options available. First is create a new trust, maybe under the same or identical name which is in existence for so many years. Get it registered with Charity Commissioner, get it registered with Income Tax under 12AB. And once you are getting the approval, not only provisional but final approval, donate everything of that old trust which was continuing in this trust and discontinue the old trust. So all the problems of not having a written document or a trust deed will be answered. Suppose trustees have hesitation. Suppose there are immovable properties involved where the stamp duty or transfer or approval of charity commissioner is required. Why trustees who are the same trustees in old trust and same trustees in the new trust? Why with same object, the old trust and new trust? Why should I recognize this? Then under Gujarat Public Charitable Trust Act and under Bombay Public Charitable Trust Act, the Charity Commissioner has power to approve the same under a scheme. So you have to go for a scheme, mention why you want to convert the old trust into writing, what is the intention, why you are doing it, everything is to be transferred, an appropriate petition is to be filed, then advertisement in the newspaper will be given by the Charity Commissioner at the expenditure of the trust, and then following the formalities, the trust can be converted into the writing trust deed. It's a long procedure, so either you can go to option A or option B, but it has to be done. And old oral trust without any deed will certainly have, in my view, difficulties under the new registration regime of section 12AB. So this is what I wanted. So better go for the trust. There are people who are asking me questions whether I should go for a trust deed or a society registration act. I would always insist and suggest just go for the trust deed. But if you have no other option, the circumstances are compulsive, then form a registered society, get it registered with the Registrar of Cooperative Society, and in turn Charity Commissioner in Gujarat will register it as under charity. In Bombay, there is a separate authority for registration. You have to get the approval of charitable objects for that purpose. Similarly, is the provision of new Section 8 of the Companies Act. One is very clear that no, I want to form a company for various reasons. Maybe the board resolution, maybe the company wants in that way, or there could be other compulsive reasons. Then you can go for the purpose of that. So this is what is important so far as growth is concerned. Now let us understand the provision of section 11. Charitable trust is formed. Charitable trust are the objects as per I mentioned those 4 or 7 objects, and trust deed is there. Charity Commissioner has given the approval. You have applied for 12AB now, or you have an old trust. We have already have approval for 11 and for 12A as well as 80G. But now, having done all that, what is the most important aspect is with regard to income, donations received, and expenditure of the trust. This is what in nutshell section 11 deals with. Entire section 11, though running into more than 8 printed pages, I'm trying to explain the provision of section 11 in a nutshell. It provides that all the donations received during the year by the trust and all other income received by the trust in the nature of interest, in the nature of all other benefits that are received in form of kind or in cash will be considered as income of the trust. So once income is determined, you know that yes, there is an income of 10 lakhs of rupees. Now, what is the next provision? The next provision is trustees must spend 85% of that receipt, that gross receipts, for the objects of the trust. So if the trust receipts are 10 lakhs of rupees, 8,50,000 must be spent for the objects of the trust. That's the section 11.1. Very, very important. Be very clear. A settler has given you the money, person has given you the donation, you have deposited that amount, you have earned the interest, you have invested in immovable property, you are earning rent, you are earning other income, you are running a school, you are receiving fees, you are running hospital, you are running medical fees, and there is income generated. That income you can't keep and accumulate and retain in the trust. You must spend 85% of the same. That's fundamental problem. Now, what if 85% is not spent? In spite of best desire, best intention, best efforts, you are not in a position to find out appropriate person, appropriate occasion, or appropriate situation to spend 85%. Then what do? You have two options in this. One, the money which is not been able to spend in this year should be spent in the next assessment year. Meaning thereby that if by 31st March 21 it has not been spent in the month of April, May, June or July. If you are in a position to spend by July, then while filing the return for 31st March 21, you can mention I have spent 50%. That is, you have spent only 5 lakh as against 8,50,000. You can mention 5 lakh I have spent before 31st March 21, 3,50,000 I have spent subsequently, and therefore 8,50,000 have been spent. That is sufficient compliance. That's option 1. But suppose by July also you are not able to spend, and you have spent from September to March 22, then only option left with you is to file a revised return that instead of 85% I had spent it in the subsequent year, and therefore 3,50,000 which I did not spend from 1/4/20 to 31/21, I have spent from 1/4/21 to 31st March 22, and therefore the expenditure has been met with compliance is required. But second option, you are not in a position to spend in the second year also, or you don't want to spend. You have an idea in your mind that no, I want to construct a small school, I want to construct a small medical center, or I want to construct a big hospital, and I have a lot of income, but that is not sufficient to meet the total cost. I am earning only 10 lakh or 50 lakhs, say, per month, per year. So the total cost of project is 2 crore. Then second provision, subsection 2 says that if you are not in a position to spend 85% of the total income in the preceding year, then you can accumulate the same for a period of 5 years, 5 assessment years. Meaning thereby 31st March 21, you have won 10 lakhs of rupees. You are required to spend 8,50,000, but you spend only 1,50,000. And 1,15% is basic that is available to you as a deduction. So 3 lakhs, 7 lakh you did not spend. 7 lakh you can accumulate for a period of 5 years. So 31st March 21, you accumulated for 5 years. 31st March 22, you are again accumulating. 31st March 23, again you are accumulating. And last, like that, within 5 years, if you are in a position to accumulate, let us say 35 lakhs. So March 21, and then 5 years accumulation, 22, 23, 24, and 25. So up to March 25, you accumulate, and that amount must be spent latest before 31st March 26. That's the important second option available. But requirement is you must pass a resolution in the meeting of the trustees. You must file a specific form, which is provided in the Income Tax Act, 10B, and with the purpose for which you are accumulating. So you have to mention, I want to build a school, I want to build dharamshala, I want to build a hospital, I want to buy an ambulance, I want to donate substantially for this particular project, I want to contribute to government in the COVID scheme over a minimum of rupees 50 lakhs in next 4 years, or whatever. And then you have to spend it for that particular purpose also. The section provides that you have to mention and file this before the due date of filing a return of income. Then you did not spend 85 lakhs and 8,50,000 and accumulate the same for the next 5 years. Or chance you decided to construct a dharamshala and you accumulate for that purpose. After 3 years, you feel that no, instead of dharamshala, it's better I should make a hospital. Now the objectives change. Now in such circumstances, what to do? The section provides that if the trustees decide that object for which the money are accumulated are now to be spent for some other object, you have to again apply to the office of the Income Tax Commissioner and tell him that instead of this purpose, now I shall be accumulating and spending for this purpose. And by and large, permissions are granted for change of the objects and if the monies are spent for that purposes, the amount will be considered as spent for that purpose. So this is what is important. Now I'm drawing the attention of my learned friends, chartered accountants, that mistakes are being committed in filing the statement of income and return of income of this 85% and 15%. Be very clear. The requirement is to spend 85%. 15% not spending is not a basic deduction. So if your gross receipt is 10 lakhs of rupees, I have seen many returns where CAs are filing the return gross total income 10 lakh. Less basic exemption of 15%, 1 lakh 50,000. Balance 8 lakh 50,000. Spent during the year 9 lakh. Therefore, deficit of 50,000. And then the deficit is being claimed to be carried forward, or return is filed as showing as a deficit. This, my friends, is not a correct way of filing the return of income. 15% is not basic deduction, not basic exemption. It is the exemption of not spending up to 15%. So what should do? The return of income should be total gross receipts 10 lakh, less spent for the objects of the trust 8 lakh 60,000 or 8 lakh 50,000, balance 1 lakh 50,000 being exempt under section 11(1), total income rupees nil. This is how the return should be filed. Now presuming that instead of 8 lakh 50,000 you spent only 7 lakh of rupees out of 10 lakhs of rupees. So what will happen? Total income 10 lakh, spent 7 lakh, basic exemption 1 lakh 50,000, balance 1 lakh 50,000 not spent, taxable. But basic limit of minimum amount liable to tax is 2 lakh 50,000 and therefore no tax. So even if you have not spent to that extent, up to 2 lakh 50,000 plus 150, up to 4 lakh of rupees, the tax liability will not arise. But friend, let me draw your attention. Chances are that for the purpose of ATG 5, there have been cases that you are not spending, you are making profit, you are paying tax on the charity, and therefore you are not acting according to the objects of the trust, and therefore your ATG 5 exemption granted should be rejected. There are cases, but one has to be careful. There should not be an intention to retain the income. Be very clear, as I mentioned in the beginning, the concept of charity is to spend for charity. And charity does not mean free of cost. Be very clear in your mind. There is a misconception in the mind of many people that charity means daan de diya, mufat mein diya. It is not so. If 100 rupee item is given for 20 rupees or 10 rupees, it is a charity. If 100 rupee item is given at a 50 rupees concessional rate, it is a charity. So charity does not mean free of cost. Be very clear on that aspect. And that is what I thought I should bring to your kind attention. So with regard to the deficit, I shall be coming to the next. Now let me deal with important issues of charity. If the slide person who is handling the slide, can you go to important issues relating to public charitable trust? Please scan through and go to that slide. Important issues relating to public charitable and religious trust. पूरा स्कैन करके देख लीजिए. Important issues relating to charitable trust. और पीछे जाइए. काफी पीछे, आगे मत जाइए, पीछे जाइए.
Sir, other important issues relating to public charitable and religious trust, do you want to go to that one?
Yes. हाँ.
Okay. I'll just tell you.
Around slide number 14 or 15 from the beginning. पीछे चले जाते हैं, आगे आइए, पीछे जाइए, आगे मत जाइए. Start from the beginning. These are all provisions for 10A, which comes in the later part. अभी जाइए आगे. Go further. Next. नहीं. Then there is some mistake. It seems slides are missing. Anyway,
it's towards the end, sir. It is towards the end. I will just tell him.
I don't think so. There is some mistake in receiving the presentation.
This is.
No, these are all for 10A. Just 1 minute, friends. Otherwise, I will continue with my presentation. Yeah, other important. उससे थोड़ा पहले जाइए, वापस जाइए, थोड़ा वापस जाइए, थोड़ा और वापस जाइए. Anyway, Let me continue. Friends, so having explained this provision of 11, I told you that you have to spend 85% 1 year or maximum in the next period. If not, accumulate for the 5 years. If not, maximum is up to 2,50,000. But suppose you are not complying with this provision, or the money which you have are not spent for the objects of the trust, or amount available with you for the investment are not invested according to section 11 into bracket 5 of the Income Tax Act, then the exemption under section 11 will be denied. This is very serious. If the exemption under section 11 is denied by the AO for invoking section 2 into bracket 15 or for any other reasons, that you have violated the provision of section 11 or section 13, then the exemption of 11 will be denied. Now what happens if exemption under section 11 is denied? Then 10 lakh rupees your gross receipts. You have spent 7 lakhs of rupees for the objects of the trust. But if section 11 exemption is denied, then the tax is payable on the entire gross receipt of 10 lakhs at maximum marginal rate. And friends, be clear, maximum marginal rate now does not mean 30 or 33%. From last year, the maximum marginal rate has been hiked to 42.74% for the highest bracket. And maximum marginal rate means what is payable by the highest income earning bracket income group. So even if the income is of 100 rupees or it is 10 lakh of rupees, if exemption under section 11 is denied, the trust will be liable at 42.74%. This is extremely serious, and there can be charge on the trustees that why you neglected, why you did not act according to the confidence reposed on you to comply with the provisions of the Charitable Trust Act and Income Tax Act, and why trust has been levied with 42%. If there is an incorrect addition, there is an interpretation issue. If bona fide mistakes are there, it's a different issue. But this is the consequence. Now, friends, what I personally feel that this is something which requires a big challenge and appeal litigation up to the highest level. Because if my exemption under section 11 is denied, means I am a trust, a public charitable trust. You don't recognize me as a charitable trust. Therefore, I am an AOP. If I'm an AOP, then you tax me on my real income. What is my real income? 10 lakh rupees minus 7 lakh rupees spent. And therefore, it should be for a tax on 3 lakh rupees. But Act does not say so. Act says once you have spent, it should be spent for the purpose of the objects of the trust, and that is only under section 11. Spending amount from the receipt does not automatically means deduction is available. And that is the analogy. And therefore, the maximum marginal rate is levied on the entire income of rupees 10 lakh. So this is very, very important, and be very clear that any breach, any violation of the Act and invitation to denial of section 11 will be of a great problem. Second important point is if there is a capital gain and a capital asset sold and there is a capital gain, then by a public charitable trust, then the indexation benefit is not available. You had a particular furniture, you had a particular ambulance van which has been sold. Or whether depreciation was claimed on that or not, I'll come to that issue later on. But let us presume that when you purchase, you debited the same for the spend the objects of the trust and no depreciation was claimed. And now it is sold. So it is a sale of a capital asset. No indexation is available on that. What is available is when you spend for purpose, it will be considered as a receipt of the trust, and whatever new capital asset is purchased will be treated as an application of an income. So this is what is very important. 15% deduction is available on the net value of the capital gain and not on the total amount of cash. That 15% जो basic deduction मैंने बताया था, that will not be available. You have to spend for the purpose of capital asset for the objects of the trust. That's very important. Now come to with regard to the nature of the receipts. As I mentioned, all donations received, all amount received from interest, rent, etc. are income of the trust. Then there could be donations received towards corpus of the trust. That is a fund of the trust. Original fund, and now a person says, I am giving you with a specific purpose, and this donation should form part of a corpus. Corpus means the fund, the trust fund. The fundamental requirement is that he must give in writing that he is giving to the corpus of the fund. Your desire or your resolution, the trustees hereby declare and confirm in the meeting unanimously that this donation received is taken and treated as corpus will not do. Donor has to be specific. You can't decide the nature of the receipt. The donor will decide the receipt. So that's very important and that has to be kept in mind. Then comes the question with regard to the anonymous donation. Earlier, people used to receive donation in cash and they would make receipt. Nathalal Chaganlal, Mr. Sunil Daiya and Mr. Manish Talati, like that, they would make various receipts. Name, address not available, person not traceable. Ultimately say, I have treated, I have received the donation, person came, gave me the money, I have issued the receipt, he has left, and I'm showing as my income and I'm spending it. To avoid this kind of black money transaction, converting into white into the guise of charity trust, as Chairman initially mentioned, to curb that, it has been provided that for the purpose of public charitable trust, anonymous donation will be treated at maximum marginal rate, again at 42.74%. So you can't afford to convert black money into white at 42.74%. Only exemption is if it is a public religious trust, as I mentioned in the beginning, for the purpose of pious duty, deity, and mandis and temples and mosque and all other places of worship. To that place, if there is an anonymous donation, it will not be treated. And the reason is very simple, friend. If there is a base example is Tirupati temple where hundi is hanging and people are putting money into that. I can share with you my own example. After finishing my term as president, when I went there and donated my hair, just in front of me, a person took out from his two pockets big bundles of 500 rupees or at that time maybe 1,000 rupee notes and donated in the hundi. He took out his all rings, golden and diamond rings, and put it in the tank. He took out his chain, gold chain, and put it in the hundi. I was wondering whether the person is in his sense, but he was so devotee that he must have believed something, and he was giving one by one everything that he had in his pocket and in his body as a donation. All these are anonymous donation. People come and give 100 rupees, 10 rupees, 50 rupees, and thousands and millions people come and give donation. So for religious trust, anonymous donations are not to be taxed at maximum rate. It will be considered as a normal receipt. This is very important. Then comes the question important. If gold ornaments, silver mugut, शादी का मुकुट को दे जाता है, gold के ornaments दे जाते हैं, all that comes which are used to decorate the deity, भगवान को श्रृंगार के लिए जो use करते हैं, if that is received, it will be considered as receipt and application of the income of the trust. और किसी ने gold बार दे दिया, चांदी की लगड़ी, चांदी का पार दे दिया, in my view, very strongly, it will not be treated as an application of income. The trust shall have to immediately melt it, use it for the ornaments, and see that it is considered an application of money, or sell that gold ornament and show the entire amount as receipt of the trust. Otherwise, it would be hit by section 56(2) subsection 10. Any donation of above 50,000 rupees will be taxed and it will be considered as an income. So this is very, very important. Then comes the question of corpus donation, general, corpus donation, specific. Donation can be of two kinds. One, I say I just give a charity of rupees 10 lakh to you and please treat it as a corpus of a donation. Sufficient. Trustees are at liberty to spend wherever they want to spend. Secondly, I would give, no, I want to give 50 lakhs of rupees, but use it only for a hospital and with name of Manish Charitable Hospital. Then it is a donation with a specific guidance, specific corpus trust. And trustees are duty bound to spend for that object only. So if he has given for a purpose of school or a hospital or a college, such corpus donation has to be used for that purpose. If it is used for any other purpose, donor's permission in writing is required. Else, in my view, again, the AO would be not wrong in saying I am rejecting your exemption under section 11. So it is to be very, very important and very careful. Now we come to the important question of applicability of other important sections of Income Tax Act. Just like when you make an accounts of any tax audit, you disallow and mention in the tax audit report of 48(3). Same way in charitable trust also, any expenditure above 10,000, 48(3) will be hit. Same way if any expenditure is made without applicable of TDS, 40IA will be applicable and it will be hit. So we have to see that trustees or the accountant do not make such mistake. 48(3) and 40I are not attracted. Otherwise, it will also be hit by appropriate tax liability. Then comes, yes, amount applied for the objects of the trust. Two important amendments. One earlier, two more now. Earlier, what used to happen? People were earning a lot of income, and such income what they were receiving, they in turn were spending for the objects of the trust. But if they were not able to spend, they would find out a known trust, a friendly trust, and say, I'm giving you a donation of 10 lakh rupees to your corpus. I'm not able to spend my 10 lakh rupees. So 10 lakh rupees will be given to the another trust as a corpus donation. So income 10 lakh spent for the purpose of objects of the trust 10 lakh and income nil. No expenditure for genuine charity at all for the entire year. That charitable trust, again after 2 years, will say, I am unable to spend for the object of the trust, so I am giving you back, not back, but I am giving you donation of rupees 10 lakh. Please take it. So this trust will again receive 10 lakhs of rupees. Like that, circulation of donation to trust were going on from one trust to another. Trustees were not spending, and government realized that this is the way by which they are accumulating the fund. They are making the trustees and the trust wealthy, but not the genuine spending for the objects of the trust. So an amendment is made, whereby now it is provided, friends, and it is very important for auditors and chartered accountants while auditing and filing a return to note that income applied for giving a donation to another trust as a corpus donation will not amount to amount spent for the objects of the trust. So income 10 lakhs, spent for the objects for the trust 5 lakhs, even donation rupees 5 lakhs. This 5 lakhs will not be treated as applied for the objects of the trust, and it will be only up to 5 lakh rupees will be treated object. So this is very important. Please keep in mind this is a very important amendment which has come. Two important other amendments which have come, let me draw your attention, though it is separately mentioned in the slide. Right? As I mentioned, people are showing 10 lakh income minus 15%, 8 lakh 50,000 spent, 9 lakh, and therefore 1 lakh, 50,000 deficit. Presuming that you have earned 10 lakh, and because of COVID situation or because of flood situation, you thought that instead of 10 lakh, let us give donation of 20 lakhs or 15 lakhs of rupees. So the trustees are giving donation of 15 lakh rupees to Prime Minister Relief Fund or COVID Fund. Income is 10 lakh and you have spent 15 lakhs. So 5 lakh is deficit. Earlier, people used to claim this 5 lakh rupees deficit for the subsequent year. And in the next year, they have earned 10 lakh, spent 4 lakh for the objects of the trust or 5 lakh. This 5 lakh, they would say carried forward of the earlier 5 lakh, and therefore my income is nil. Now the amendment is made that trust shall not be allowed to carry forward any deficit and set off against subsequent years' income or application of income. Very clear. Now this is a problem. If trustees are genuinely spending against 10 lakh receipt, 15 lakhs of rupees, why 5 lakh rupees on that? The benefit should not be given to them, and why should be denied? So two important amendments are brought in section 11, explanation 4. That you have income of 10 lakh, but you have spent 15 lakhs. Means what? You had only 10 lakh of income, but you spent 5 lakh more. Means you must have borrowed from someone. So you have taken a loan from someone. Some trustees or some relative or some friend or some another trust or a well-wisher has given you the loan. So that loan is standing in your balance sheet and books of income. Next year or subsequently in whichever year, second, third, fourth, fifth, sixth, seventh year, whenever you repay this 5 lakhs rupees loan, which you had spent for the object of the trust, repayment of loan will be considered as an application of the income for the objects of the trust. So now you have to maintain the loan register and application of income for the purpose of claiming that. Secondly, you have not taken loan. Nobody has asked you to borrow, but you had sufficient donation available which has been given to corpus of the trust. So your corpus is of 1 crore. Your current year income is 10 lakhs and you have spent 15 lakhs. Means what? You have spent from your 1 crore corpus. So 1 crore corpus become 95 lakhs. So you have used 5 lakh corpus for this and you have spent 15 lakhs. From where you use this? all the corpus are strictly to be invested as per section 11 subsection 5. There are 17-18 items in which you have to use, you can't use in mutual funds, and you can't invest in shares. They have mentioned various post office savings bank account, nationalized bank account, and other cooperative bank account, etc., etc. So all investment and funds of the trust where to invest is clearly mentioned. So you have withdrawn those investment and spent 5 lakhs of rupees. In subsequent year, first year, next year, or after 2 years or 7 years, whenever you give back this amount to that corpus, meaning by invest back in that bank account or from whatever investment you had spent, it will be treated as an application of income. And even if you have not spent, repayment of corpus will be considered as an application of income. So this is very, very important provision where you must keep in mind, and that is what the important issues with regard to the charitable trust. Now, certain important issues. There is no enabling provision either under Mumbai Public Trust Act or under Gujarat Public Trust Act to cancel the registration in spite of there being no fund. Every year you are receiving the income, every year you are spending not 85% but 100%. Year to year you are receiving no donation to corpus. So a time has come that you have spent your corpus, you have spent your entire income, your trust has become zero or just meager amount. There is no provision to cancel the registration. The trust must continue unless you want to close the trust. Now for that, it is very, very important that you must have a provision how to close the charitable trust, how it should be given to another charitable trust. The trust is irrevocable, and what will happen to charitable trust when it is closed. These provisions are now required to be mentioned in the trust deed. Earlier there was no compulsion, but now that is compulsion. In Gujarat, there was a commissioner who said that no, not only this provision of irrevocable and what will happen when the trust is closed is to be mentioned, but when you apply for 11 and 12, you must show what is the income and what amount you have spent. Maybe 10,000 rupees, 50,000 rupees, but show that you have earned and you have spent for the objects of the trust. Then only I give you the exemption under 11. Now that was represented to the board, and board had given that internal direction that you can't insist for initial spending. That if the objects of the trust are for the purpose as clearly provided in section 250, the trust must be registered. So this is what is very important to be kept in mind, as I mentioned. Then the next important point is with regard to difference between religious trust and charitable trust. Charitable trust will be entitled to section 11 and 12 exemption, so religious trust. But ATG 5 will be available only to charitable trust and not to religious trust. So this is very important and it has to be kept in mind. So these are the fundamental provision with regard to section 11, section 12, and now we go with the registration of the charitable trust. Earlier section 12A, then 12AA. Now from 1421, 12AB. Section 12AA has been deleted with effect from 31st March 2021. And section 12AB says every trust charitable which either to has been registered perpetually or with a time limit, or earlier you have applied and section 11 and 12 exemption has been granted to you, shall have to file again an application under section 12AB in form number 10A. So this 10A is now most important form for every single chartered accountant. In Ahmedabad, there are chartered accountants who have 500 trusts, 700 trusts for which they are doing the audit and filing return of income. There may be 50, there may be 5, there may be 10 with various chartered accountants listening to this. For every single trust, you have to go through your client list, take out all charitable trusts and file the form 10A before 30th June. Most important. So let me go to step by step with those provisions. If the slide person is there, go to form number 10A, which was earlier you were showing. Form 10A वाली जो slide थी starting में, वो अगर आ सकती है तो please वापस ले आइए. All public charitable and religious trusts registered with Charity Commissioner, all companies registered under section 8 and all cooperative societies. तीनों जो इसका 11 और 12A का exemption था 31st March 21 के पहले, have to apply for fresh registration. आपका परपेचुअल है, आपको 25 तक दिया है, 27 तक दिया है, कुछ भी है, you have to again file Form 10A. All trust or institution having approval under 80G5 as on 31st March, yeah, please show the slide, have to again apply before 30th June this provision. So April, May, and June, and now we are on the 5th June. You have only 25 days left. Don't wait till the 29th and 30th. No extension is likely to come because COVID impact is going on. You can do this online. There is no provision by which you are not in a position to file. Certain requirements of 10A, 10B such where there could be difficulty. Well, the board may extend the date. I personally of the view that sufficient time is still available, and by 30th June you must file this form. That's very, very important. All trust and institutions falling in the residue category. So all those who have applied and have registration before 31st March, they have to apply. All those who applied after 1/4/20 and between 31st March 21 but have not been granted, their application would be transferred. They automatically will receive the provisional application approval, and then again they will have to file. Or, in my view, they can file 10A voluntarily again. It's one more professional opportunities, professional work, and your trustees will be happy that yes, you are online and you are with the latest amendments and requirements. And all new trust. That is where the problem arises. For old trust, no problem. But if there is a new charitable trust, the provision says that you have to apply 1 month prior to the commencement of the previous year, relevant to the assessment year for which registration under Section 12AB is sought. That's for new trust. So let us say you want to apply for the exemption for the period 1/4/21 to 31st March 22 and onwards. So 1/4/21 to 31/3/22 means you have to apply 1 month before, meaning thereby you have to apply before 1/3/21. So your trust must be there before 1st March 21 to get the exemption from 1/4/21 to 31st March 22. But what if it is in the subsequent year? If suppose someone wants to apply on a specific auspicious day. For example, my birthday is coming on this 23rd July. So I would wish that yes, I should establish a trust on my birthday 23rd July 21. If I apply for 23rd July 21, I will not be granted exemption for the year ending 31st March 22. So almost 7 months I will not be getting exemption under 11, and I will not be getting exemption under Section 80G5 also. I'll be getting from 1st April 22 to 31st March 23 and onwards for a period of 5 years. This is something harsh. I think here a period of 3 months should be mentioned, and if it is so given, the trust who are genuinely interested to do immediate various charitable activities in a big way. Suppose a will is created, a person dies on 1st of April or 2nd of April. For 11 months, he cannot get the exemption, and his whole money will lie as it is. That is something which is undesired, and government must think. I would suggest WIRC as well as we at association level from Ahmedabad are going to represent on that. So now let us understand who are required to file application. Can the slide be go on that? Who are required to file an application for fresh registration under Section 12AB? Go to that slide. All the funds, all the institutions, all universities, all educational institutions falling under 1023C have to file from 1/4/21 to 30th June. ऐसा नहीं है कि सिर्फ जिसको 11 और 12 चाहिए उसी को करना है. अब 1023 में है, you have also to apply. Then all those institutions who are approved, mind word, Section 1023C and 35(1) says approved, and Section 11 and 12 says registered. So there's a difference between approval and registration. In approval, there is a longer process. They will verify your trustee, they will verify your accounts, audited accounts, scan through and go through and analyze the income and expenditure and nature of working, and then only the exemption of 1023C or under 35(1) will be granted. So all under 1023C have to apply and 10A. All under 35(1) have to apply under 10A. And all under Section 11 have to apply under 10E. If they are society registered, they also have to apply under 10. If there is Section 8 company but charitable activity, they have to apply under 10. So if you are 80G5, also you have to file under 10. 10A is very, very important for all 1023C, 35(1), 11, ATG 5. For all of them, filing of 10A form is extremely important. And once you file the form 10A, you will receive a provisional registration within 1 month. And let me share you my personal experience. From our office, we filed about 20 applications by 31st May. And almost 10 cases we have received the provisional registration in form 10AC. Provisional registration means, yes, your application is received and prima facie appears to be nothing wrong. They might not even scrutinize, but based on your application, they have given you provision. Then they will scrutinize your application, whether you have filed your trust deed in English language or not. That's another most very draconian provision, or if not draconian, very difficult provision. And in entire India, you have to file English version of your charitable trust deed. Now in Maharashtra, you have deed in Marathi language. In Gujarat, we have many trusts who are in Gujarati language. In South, they be in Kannada, Tamil, Telugu, Malayalam, different languages. All those people will have to do English translation. And believe me, if you put this translation into Google, it's giving you a Badram Badra English of no purpose, no sense, no meaning. So you'll have to appoint a translator, or unless a chartered accountant expert, he will have to do the translation, maybe by charging fees, professional fees, or voluntarily as he deems fit. But it has to be done, and it has to be filed accordingly. So this is very, very important. In my personal view, Hindi document of charitable trust must be accepted. Hindi is our national language, and if you do not accept, you celebrate Hindi Pakhwadi, Hindi week, Hindi bi-monthly festivals every year, whereby people are expected to issue every order and notice in Hindi. But when it comes to document, you don't accept in Hindi. That is something not correct. Again, a representation is required to be made for this purpose. And then every single trust will be granted a unique registration number, alphanumerical. So just like PAN number, every charitable trust who have applied in 10A will be granted a unique registration number, URN. So just like DIN, just like PAN, just like 10, we have now URN. So this is very important and you have to be kept in mind. After receiving of 10A, after issuing the provisional certificate within 1 month, thereafter you will be granted a fresh registration under 12A. If everything is fine, your old registration is there, your audited accounts, if they are asking, or your summary of account they are asking is fine, your genuine spending for the objects of charitable trust, and whatever the satisfactory condition, the appropriate officer or the board may direct them to verify, including document of charitable trust deed, etc. Thereafter, they will pass an order under section 12AB, either rejecting your application or approving the application. And if they will approve, it will be for a period of 5 years. So after every 5 years, you have to again apply. It's a headache for a charitable trust, but a great professional opportunity for all chartered accountants. Not only that you get fees, you may get a lesser fee. You feel that why should I charge to a charitable trust? It's your desire, your gesture, your willingness. But you can be charitable to a charitable trust. But as I mentioned, charity does not mean free of cost. One need not do it free of cost. You may charge a lesser fee, but that's I leave it to your individual. Now, what is important here is who are required to file an application. As I mentioned, 10A, if not has been duly filed, it is partially filed. There is a false statement or false detail given, incorrect informations are given, or documents are not provided, then your 10A will be rejected. You may be given an opportunity to rectify. After rectification opportunity also, if you are not able to comply within the time provided, the trust will not get the registration under 12AB. And if it is not getting registered 12AB, it means you don't have exemption under section 11. And if you don't have exemption 11, you pay tax at maximum marginal rate. So what is the remedy? Only remedy is that if it is, in your view, 12AB has been rejected incorrectly, you have to apply straight to the tribunal. There is no appeal before CIT appeal, and it has to be filed before the tribunal. Failure to make fresh registration will result in denial of exemption. If you don't file before 30th June, then what is the consequence? I'll come that to later on. But then let me deal with certain aspects of 1023C before I go to those final points of non-compliance of 10A. 1023C is a very detailed provision, again running into 10 page. There are 18 explanations about 11 provisos. But important thing is it has to be a university or education institution solely for education purpose, not for profit, or it should be substantially financed by government. If these conditions are satisfied, then such education institution will get exemption under section 1023C. And same way, a hospital. A hospital which is exclusively for the purpose of providing medical relief, or wholly or substantially financed. Substantially means more than 50% financed by government. Then such charitable trust will be qualifying for 1023C. But as I mentioned, there is a separate application, separate approval under 1023C. The authorities will verify all the requirements, and then only you get the exemption under section 1023C. Otherwise, all these 1023 trusts also have to file, as I mentioned, in file 10A. Approval is normally granted within 6 months. If not, then as I mentioned, they will issue a provisional certificate. But as I mentioned, this 13-page section 1023C, I am purposely avoiding. Separate form number 10A to be filed for revalidation of 12AB. Are this slide is with me? No. Finance Act has brought the requirement of revalidation of existing provision. So all old charitable trusts, as I mentioned beginning, have to again revalidate. Don't think that because my approval is for 25 or 24, I am not in a need of applying. You have to apply again. Even ATG 5, as you know, they were given for perpetuity. Prior to 1985, they were given for 3 years or 5 years. Then the amendment came and they said once ATG 5 is granted, it will be perpetually unless revoked by the Commissioner of Income Tax. Now they say no, again we will not give you perpetual, but we will revisit your genuineness of the claim and donation received and nature thereof, and then we will renew every 5 years. So this is what is there in form. The Form 10A is required to be filed for renewal of ATG with effect from 1st April 21, and that is to be filed in Form 10AB, which is yet to be issued. And the renewal, as I mentioned, it will be for a period of 5 years. The procedure of filing 10AB is going to be, as mentioned in Rule 18, but the form will be notified and then it has to be filed accordingly. Now, most important is control of donation received and donation credited in the books of account. Donation given with a specific object and specific direction that it should form part of the corpus, specific corpus or general corpus, I already mentioned, and other donation which will form part of the total income. Now, from financial year 21-22, effective from 1st April 21, all institutions notified under 35, all institutions approved under section 80G, and all charitable trusts under section 11, you are required to file a statement of donation with ATG registration and compliance in a specific form. It will be like Form 26AS. As you know, friends, 26AS has become like a Bhagavad Gita for department. They are in a position to verify what tax has been deducted and what should be the income of that. Same way, this form is required to be filed. And if it is not filed, forget availability of exemption, forget whether it is timely filed or not. Under section 234G, there is a fine of rupees 200 per day for not filing such statement, and a penalty under section 271K, minimum 10,000, which may go up to 1 lakh of rupees. So do not delay, file all such forms within the stipulated time. And stipulated time provided is 31st May every year, and for the first year it is 30th June. Income tax rule 18B provide that such certificate and it should be provided in such manner and giving such particulars as provided in all these three cases, 1023C, 35 and 80G. So this is very important. The next is form filing statement of particulars required to be furnished by reporting person in respect of each financial year, and that is in Form BD. So 10A, 10B, 10AB, 10BD, all these are to be kept in mind. Now comes the question of donation receipt, as I mentioned, 26AS, and to donor, you have to give a separate receipt. That is in Form 10BE. So even if you have received a donation in Manish Charitable Trust, and if you have fine letter and receipt received from Mr. Drishti Desai, a sum of rupees 1 lakh, that receipt will not do. Another receipt in a specified Form 10E, 10BE is to be issued. And that is like 16A or Form 16, which we are issuing to salary certificate. So friend, understand, certificate of donation received in Form 26A is like that, and this 16 like certificate to the donee. All this will be matched. As of now, what is happening? While filing the return of income, I mentioned given the donation to Talati charity is 1 lakh of rupees, 80G. Receipt is filed or not filed, your return is processed under 141 and you are getting the deduction under 80G. There was no control, no appropriate verification. Same way for donor, they were receiving the donation but issuing the receipts without mentioning, as I said, detailed name and address. Anonymous donations were also treated as with certain names so as to combat the provision of anonymous. All this now will be checked in these two forms. And if it is not matching, those donations will not be treated as income. Those donees will not get the deductions. So all bogus deductions being claimed under 80G5 will be controlled and stopped. And all such bogus receipts and anonymous donations will also be controlled. And there will be a counter check. Now imagine that there is a joint donation given. There are a number of cases where a donation is given jointly. Mr. Sunil Talati, Mr. Manish Gadia, Drishti Desai jointly give donation of 10 lakh rupees to benevolent fund. Now it has to be mentioned that yes, how much A has given, how much B has given, how much C has given. If that is not mentioned, then it has to be segregated by the person. So aggregate of amount. The reporting person shall, while aggregating the amount, determining the sum received of any person, same nature paid by that person during the financial year. Donation shall be proportionately attributable to the value of the donation or the aggregate value of the donations. So three names are there and person don't say who has given how much. The donor will have in the statement aggregate equally. So 10 lakh rupees by three persons, he has to say one third each, and that is how the form is to be filed. So this is with regard to donations received, donation to be accounted. Date of filing and issuing of certificate. Certificate of donation in Form D is required to be furnished to the donor on or before 31st May. So in that also, there is a time limit prescribed. Now, important point is, for such points, what are the time limit prescribed? 30th June for filing Ton A. For this, for the purpose of this certificate 10BE. Now, in such case, if the forms are filed late, what will be the consequence? What will be the late filing fee? What will be the penalty? Are clearly not coming. And then comes expenditure on religious activity, which you saw the slide. 10A and 10AB have a category of charitable and religious organization, which settles the confusion of whether an organization is for purpose of religious or for the purpose of public charity at large. Only thing you should know that yes, 5% religious activity is done in a public charitable trust, then to that extent, it will not be hit by a religious trust. Your ATG5 will not be hit. So while doing the audit of the charitable trust, every chartered account must be specific whether the expenditure incurred under the head of advancement of object of general public utility. Is there an element of religious activity involved or not? And if so, whether it exceeds 5% of the total expenditure of the trust or not. If so, you have to be very clearly mentioned, otherwise the trust will be hit and the consequence will also be liable. So friends, these are very important points with regard to the registration. I have mentioned various points in Form 10A, but for want of time, there are about 21 points to be mentioned in that. I will not be taking your time in that. Take it from me, friend, the Form 10A filing is not that difficult. One has to be very careful in understanding and reading all those provisions. And if you carefully go through all these provisions, you will be in a position to file Form 10A very easily without any difficulty. As I told you, if some details are not available, you don't have time for English translation, Let the form go in time. Let the query come, and by that time you provide all those details which are left with in the original form 10A. So you receive the provisional certificate at least, and thereby on complying the details, you are in a position to get the final approval under section 12A. So friends, these are the, in summary, I have tried to explain various provisions. Form 10A, there are branches, there are study circles who are organizing how to file 10A. So I would request Drishti and of course the chairman of WRC that a separate seminar or webinar be organized, holding another for 1 or 1.5 hours by a speaker, how to file form 10A and what care and caution should be taken, so that all other forms which I mentioned in my presentation are also appropriately taken care of. This is important and it will be great help to all chartered accountants who are dealing with the charitable trust. So friend, at the end, I would say, I mentioned in my article, be charitable to charitable trust. It applies both to government as well as to chartered accountants. Government needs to be charitable. Majority of the trusts are doing genuine activity. So don't be harsh, don't be too technical, don't be so rigid on applying the provisions of removal or non-granting exemption under section 11. And be charitable to charitable trust. See that yes, all your clients are applying in form 10A in time. You take care, appropriate care while certifying in form 19, form 9C. When you give a certificate, you be careful of what head of expenditure you are debiting under various ABCDEFGs, that 7 objects of the trust, and see that none of the provisions of 11 and 12, as I mentioned, are violated and trust is inviting unnecessary litigation. I wish you all the best. If there are questions, I'll be happy to answer the same. Over to you, Drishti.
Sir, I think there will be many questions. Sir, you really covered all the aspects very well. Of course, we had some technical problem in, I think, maneuvering the slides.
Yeah, slides were a
But the way
problem.
you covered everything, I think, if yes, sir, if anybody listened to all the parts that you covered in detail with extremely good flow, so I think that would explain the position very well. मिश्रा जी क्वेश्चन है तो जरा प्लीज स्क्रीन पे डालो.
Thank you, Drishti. Many times I say that PowerPoint presentation is not necessary. It is for those who don't have power in their presentation. So I think I am able to do away with the slides and try my best in presenting. Thank you. Yeah, any question you may please tell me, Drishti.
Drishti,
Sir, can you see the questions? They are posted on the screen.
Yeah, if during the
So there are
COVID
questions
period,
on the screen. I will just
I
read.
am able to read
If
it. Yeah.
during
If
the
during the
COVID period, yeah, okay.
Yeah, you read it. Yeah.
Okay.
Drishti, you may read.
If during the COVID period a trustee had died, but due to COVID restriction, the details were not updated with the Charity Commissioner Mumbai. Now, as per new regulation, the trust needs to file Form 12A. What should be done? File form with old trustee, or first updation is required to be done before Charity Commissioner?
I would say first file with the old trustee. Don't wait for the amended things. You should not have any delay. So delay will cause you the denial of section 11. And thereafter, once provisional certificate is granted, file the revised one with the new trustee as may be appointed. A PTR also is required to be filed with Charity Commissioner that the old trustee has died, his name should be removed and new trustee's name should be added. It is called PTR. Next.
When trust properties, including immovable properties, along with liabilities, are transferred to another trust having similar objects with same trustees, whether stamp duty is attracted?
Yeah, this is an important question because ultimately it is a transfer from one trust to another trust. But stamp duty at the normal rate of 5.75% or 1% less for lady will not be attracted. It is for the Charity Commissioner to decide what will be the stamp, and that is the stamp payable.
Please let
It
us
is
know
different in
period for which
different in Gujarat and different in Maharashtra. Sorry.
And different in Goa.
Next question. Yeah. And different in Goa, correct. Period for
Please
which
let
trust
us know period for which trust is required to keep accounts and other records under Maharashtra and Gujarat Public Trust Act.
1+6. 7 years. There is no specific provision
Whether-
mentioned about reservation, but 1 plus 6 is sufficient.
Okay. Whether employee group gratuity trust needs any kind of registration.
See, gratuity trusts are governed under income tax rules 199. They are not under section 11. So for that, this registration is not required. Next.
You're on mute,
Okay.
Drushti.
My
Yeah.
trust is claiming exemption under section 1023C 3AB, where no approval is required. My understanding is that no registration is required through Form 10A. Please guide.
Yeah, I mean, how you are in a position to get exemption under section 1023C without approval, I'm happily surprised. I don't want to go into that detail. But if you have 1023C approval, or if you are getting the exemption under section 1023C up to March 21, even then, I'm repeating and harping, filing of Form 10A is compulsory for you from 1st April to 30th June. No exemption at all.
Okay. Is irrevocability clause required in section 8?
In my view, yes. In Gujarat, they are insisting. There have been many such orders. I would say it is very simple. Make an amendment in the trust deed, file a copy with the charity commissioner, and the receipt of that with amended clause. If you file with the income tax department, they are satisfied and they don't go into further process of really amending the entire trust deed.
So, sir, I think here what the queries wants to ask is, if it is a section 8 company, then can there be a irrevocability clause in this?
Yeah,
Because
that is
section
the
8
thing. If
company.
it is section 8 company, then in article you must
It means-
mention. In article of association, you must mention. If you are an old age company or old section 25 company and you have not mentioned in the articles unknowingly, please amend that, file an application with the registrar of company and file the copy of the same with income tax department. Just like you can alter the articles, you can alter this clause and file the copy with the income tax department.
Okay. Because ideally in section 8, nothing can be given to the shareholders, the members. So,
correct.
Okay.
That is why
They could have used, yes, they could have used the list under CSR rules for defining charitable purpose. That's, I think, a suggestion.
Why you want to go extended? All these 7 objects are sufficient. They take care of every single activity of donation and charity on the earth. Our act is already complicated. Why you want to complicate further? Mr. Chitle would agree. After I started the practice since last almost 40 years, it is for the first time that Income Tax Act is so bulky that it is difficult to carry in one hand. First time I have to carry the act in 2 hands.
Yeah, and as far as the CSR is concerned, it is confined to company's area of operation, etc. So it is better.
Absolutely correct. Absolutely correct. Can a settler
of a private family trust become beneficiary for a revocable trust? Also, can a charitable trust formed under a court order required to form a trust deed for registration under 12A of the Income Tax Act to claim exemption from taxation?
see, a settler can certainly be a beneficiary. And once it is an irrevocable, he will permanently be a beneficiary. The complication of section 60, 64 will be attracted as and when applicable. I am not going into the complexity of the taxability of the private trust, but I'm replying to your question. Coming to the second limb of the question, if the trust is settled by the court order, that is sufficient. So the order of the court and directions given by the court with regard to who shall be the trustees, what will be their responsibility, is a sufficient trust deed. And that can be filed along with form number 10A.
Yeah, so separate trust deed is not required.
Not required.
Yeah.
Okay. Is my ATG5 cancelled even if 11.1 is not complied, but there is no tax effect? Sorry, I'm not able to.
Yes, see, this depends on, again, on the, I would use the word whims of the assessing officer. For 1 or 2 years, your income become taxable. You are not spending 85%. You are above 2,50,000. And the AO may feel that yes, you are not acting for the objects of the trust, and therefore I am refusing your ATG fine. Some may do it, some may not do it. There is no specific law or case laws in my knowledge with regard to denial of ATG vis-a-vis continuation of exemption under section 11. I would suggest better don't do it. Once a trust is established, please spend 85% of the same, either within 1 year or within next 5 years, as I stated in the beginning, and avoid all such complications.
So I think that's about
I
it.
think, I think you have completed sharp at 8
audience.
p.m. I must compliment you, Drashti, for completing at sharp 8 p.m. and to Mr. Chitle also.
Sir, we have noted the points
Sir,
for.
all credit to you and the CPM.
Yeah, you can draft, Drushti, whatever points on which representations are sought by Honorable Talati ji. We can make it through institute.
So nice of you.
And we have already talked to CBDT members. They are apprised of some of the limitations.
Yeah.
I believe that within one.
I must compliment Institute and Council. They are really very proactive this year. Maybe one of the reasons is that due to COVID, you are at home and you are able to work more, and your time in traveling and hotel is saved. So my compliments to all council members and particularly to you, Mr. Chitle, because I have seen you have an analytical mind and you are arguing every issue as if you are arguing in tribunal. So it's beneficial to the council.
Thank you.
And to the members.
Sure, sir. It's really a privilege to have Chitle sir as a direct tax committee chairman at the center. We look forward to your guidance. And now may I request Jayesh Kala to please propose a well-deserved vote of thanks to Talati sir.
And also, I think we can organize one seminar on practical filing of this form 10.
Yeah, that you must. Manish bhai is listening with a cup of
So, sir,
coffee.
Manish
bhai ko request
sir,
kijiye.
we had.
So you had it.
Sir, we had one session on charitable trust re-registration, and that was taken by Gautam Nayak, and it was a very detailed session on exactly what are the components, in Form 10 in A and what is to be submitted in the different parts. But we can again run one more session because that's really required by all the members.
Required for many chartered accountants. It's true.
So definitely, we will repeat this program in great detail. Actually, I think we had only for 2 hours. Now we will have 2 sessions and greater detail. We will have this. So great suggestion.
Maybe when new portal is released, we will have to see what changes new portals brings in. So that will be more.
Correct. After 10th. 7th is the last date. So after that, let people feel the feel of the new portal.
Yeah. Jayesh, you are on mute.
Yes, sir, we can hear you.
Jayesh bhai, you are on mute, not audible.
You are still mute, Jayesh.
We can't hear.
Anyway,
so I think we can't hear. There's some network issue.
Vote of thanks.
No need of thanks. It's my duty and pleasure to be with you.
We get pleasure in proposing it. So
I request Drushti Desai to kindly propose well-deserved vote of thanks. Over to you, Drushti madam.
Yes, thank you, Manish bhai. Sir, it was such a pleasure actually listening to you, and in fact, without the BPT, it was even better to focus on what you were saying. And you said everything with so much energy. And as I said earlier, the lucidity of your entire session really captivates all the listeners. I think we've learned a lot from this, and you explained with all the practical experience that you had on how to go about in various situations. I think that's a great takeaway for everyone here. So thank you so much for spending your valuable time with us and being here to guide us. Thank you very much, sir. And Chitle sir, thank you very much for all your support.
Thank you and good night.
Thank you. Good night.
Stay safe, everyone.